Let's take a look. Whip. Let's see if it works out. Doesn't look like it's going to work out. Should be going, but I'm not seeing it on the stream. Yeah, we can't have this stuff on. That's just extra. Yeah. I got nothing. Okay, get off Discord while I stream here. Good morning. Doing well. Hope you guys are doing well as well. Boom. Right out the gate. Hey, good morning. Relative Decibel, how you doing? I will more than happily look at some stuff if you want to look at stuff. I got active trades going, so I'm not going to be able to, multitasking is tough, and the more that I multitask, the less that I do. So I tend to do a lot better with like 3 to 5 things in focus, most in the market. So I'll just let you know that. Like, I will definitely try to take a look at some stuff this morning. I want to look at AMC and GME. I want to look at, because I think they're really close to go time. I really do. There's interesting stuff going on with both of them, and I think they're right there. But it's kind of like a mixed bag too, because I think some folks are expecting it. When I say it's about to go, I think a lot of people might be thinking like, well, it's just going to go up, right? And that's true. Like, I'm expecting a really big move, but it may be preceded by a drop. So that's not off the table by any means. It's just not. So, hey, what's up, David Stevens, peace. So it's certainly like a mixed bag, but I've got some that I've been following for a while, Apple and Tesla. They're both in pretty good spots to kind of make some big advancements going into next week, possibly even into Friday. It's always a mixed, again, there's always mixed approaches to things. I'm actually in Target right now. Target's an interesting play. It's a pretty cheap play if you're trading options. They're like 30 cents for like a couple weeks out. Really not a lot for like a 105, and that's where I'm at right now. I think it's got a huge potential here as a bottom. Now this could end up being a spring. Oftentimes you get a phase B bottom like this. So it's like a up auto reaction and then a support and then a phase B top. And so you could have like a spring motion here for sure. It could dive beneath the floor. So again, just because I'm thinking it's going doesn't mean I think it's going to be like boom, like now. I think there's a possibility it just goes, which is what I've got on the chart. But it absolutely could have a kind of a spring motion down here. And I wouldn't be overly surprised by it if it did happen. But like, it's got massive trajectory potential for up to 105. So, morning, my guy. So I'm in Target right now. I'm kind of trading in and out of it. I traded about 30% this morning, got a swing. I'm doing very well. I'm not going to sugarcoat it. I hope that this is not going to jinx me, but I'm doing very well with my challenge. I started week 1 with 500 in mind. I made $690. I started week 2 with 500 in mind again. I knew I had more entry though, so I did up the amount that I put in. But I actually traded more and made less. And week 2 was when we were in kind of a downward motion. We had kind of a crappy week in the market. So I made $650. So I made less than the first week, but with the same goal. I still beat my 100%. This week, again, not trying to jinx myself because you never know what happens, in the market. But so far, I've had really good trades. I've had, out of 8 trades, 7 of them have been winning trades. I had a goal this week of getting 1,200. So what I did is I took what I made the first 2 weeks, the first 2 profits were 600 plus, 600 plus. And then I said, all right, well, I'm going to use that now. I'm going to shoot for doubling that. So I'm going to have 1,200. I'm going to shoot for 1,200. And so far this week, I've made 1,400. So am I doing well? Yeah, I'm doing well. I haven't crossed any kind of like huge threshold. We're at triple digits, I guess. Well, triple zeros anyways. We're in the thousands now, but it's not like I'm making 10 grand a week. Could you live off of 1,400 a week? Yeah. You're going to probably make 70 or so grand a year, but you're going to have taxes and stuff that take a lot of that away. So maybe knock it down to like, I don't know, 40 to 50,000 a year. You could live off that. So it's certainly possible. And this is a lot like what happened, early in the year when I first jumped back in before the summer months hit, and I was really focusing on trading. I was doing very well, and then I just kind of stopped and focused a lot more on streaming. So why am I talking about all that? Well, like I've said, this is the new normal for me. Like, I'm not going to be streaming as much. I know it kind of sucks if you like the streaming. I get that. I am in GameStop. I am in AMC. I am very, very, very bullish on both. I am. I'm not out of them. I still think they're going to go, and I think they're going to have huge moves within the next few weeks even. But I don't think that I need to be stagnant and just sort of do nothing while I wait for these 2 tickers to go, which is, I mean, look, everybody's got their own path in life. Some people are going to work a 9 to 5. They can't possibly day trade. They don't want to day trade. They don't have the aptitude for it and or the patience for it and or the capital for it. I get it. My idea with this challenge was to start with a very low entry bar, and I started with 500. I could have started, in theory, with less because percentages are just percentages. And that's the bottom line is like, not all my trades have been winning trades by, a long shot. They haven't. And I don't mind showing you guys this. I don't think there's anything on here that's really particularly noteworthy. But essentially, like, what I have here is a spreadsheet. So like you can see, like, the first week I actually traded with no losses, but that's a really good week. So again, that was like a 695. So what I've got here is I've got my starting amount, which was 500, and then my average trade amount, and this is important. I realized very, very, very quickly that I was going to need to have and there's target going off at my low level check-in. I wanted to get a buy-in there. So I need to do that. But I started off very, very much in the place of, all right, I'm just going to work on this number. But then I realized that, like, in order for me to get that, in order for me to stay consistent, I need to have like a certain trade amount. So I decided on 25% roughly would be my trade amount. And it's a little bit more flexible than that, but I'm like, roughly on average, I don't want to be exceeding 25% of my total on any given week, because if I lose it, then I'm not like, SOL. Like, I have a pretty decent chance I can get that back. And if I did lose up to 25% for whatever reason with 100% loss, which is not good, you shouldn't be doing that anyways, then, okay, I've lost 25% of my total profit or whatever. That's a big deal, but it's not 100%, right? So in any one given trade, I never want to lose more than 25% of the total. So that's what I decided to do is like, well, I have to limit the trading amount. But what I decided was that it would be more like an average. So I decided to keep like a running average. So like my total average trade price here is $137 on the first week. Guys, that's not that much money. If you think that this would cost like a fortune to do it, like, oh, I can't trade because I don't have capital. An average of $130 per trade is not that much. It just isn't. And I'm really trying to be careful because what I'm doing is I'm saying, well, as we go, I want to see if I can get close to that average on each trade. I don't want to get way above it or way below it, but there certainly were times where I was like highly exceeding it, and then other times where I was like, you could imagine, like sometimes I'm like a little bit over it by a good chunk, and sometimes I'm under it by a huge chunk. So this first week I really played on one of these, and I'll kind of be brief about this. I'm trying to place an order right now for Target while I'm talking, so because it dropped into my retracement range. These are pretty standard share positions, and I didn't make huge amounts of percentages. That's like 5-8%. One of these is like nothing, but they are decent, little bits of gainers. And really what they were for me was like watching pre-market moves and then buying on like a retracement and then buying it back up to the top. Or the reverse, which is if it's not in a bullish trend, but it has, or if it isn't a bullish trend, but it has a drop, buying a retracement on the drop, like a correction. So basically both of those are sort of corrective measures, which is great. That's my bread and butter. That's what I did here on Target on this move and on this move. Like I traded both of these moves up because I understand wave formation at this point. I've got a pretty good grasp on it. So I know like what a reaction would typically look like. And like oftentimes it doesn't go as far as you think it's going to go. It doesn't go fill the gap, right? It just has certain reactions. Those are just fib retraces. Usually it's like a 50% fib retrace, for example. That's pretty safe. It's pretty safe. And if you have an idea of timing, then you can very easily get a call option with enough time. I haven't really had a lot of misses as a result. And that's not, again, it's not bragging. I'm just telling you, like, it's totally doable. The second week was a lot more like wishy-washy. I had more losses. I had one 100% loss. This was a trade that I actually entered on Tesla before the challenge began. You can see it's way too high. But it was only $137, and I chose to not roll it. I said, you know what? I'm going to eat that loss. So this week was actually hampered by this one that was entered 2 weeks prior. So if I had, because I got into this before the 12th that week, it says 8/12, but it really was before then. I just rolled it into that week. This actually hurt my bottom line quite a bit. We've been like, closer to $800 for profit. But the rest of these losses were fine. I only had an 18% loss. It's not bad. A couple like whiffs here and there, but for the most part, did pretty well. Roblox was one that was brought to our attention. That one did really well. There's a couple others like Riot didn't really show a lot of potential after a minute, so I got out of it. They're really low profit amounts. Roblox was a big one for me for the second week. It just had a lot of really nice moves in it. And a couple others. Target had some pretty huge moves. This was a pretty significant 64% gain. It was probably here, trading from down bottom at like 96.5 up to about the top at 99. I didn't trade this top bit. But those kind of things are great. And then Tesla and Roblox this week have been really big winners. Tesla's kind of struggling right now to kind of keep itself above water here and make this advancement. It needs to get back above 355. But I think if it does, it's going to eke its way up to 360, 370 pretty quick. And then Apple's the same way. It's really kind of struggled. There's a bottom here that was kind of nasty, but it did finally fill that gap, or got close to it anyways. And then the rest of this is really just a cross up. It needs to kind of show strength here, and then it should have momentum to have a decent push, at least up to like 236 area, maybe beyond. I mean, this could be a pretty massive swing potentially. I've really not had a lot of trouble outside of just a few that just kind of sticky situations. You're just like, well, I don't really know what to do. Like one example was this Tesla loss here. This was a put. And I actually probably would have made money on it if I had held longer, because I got the put back here. I wasn't sure what was going to happen in this situation, but I actually bought the put. Like it was just basically the same idea. You're approaching that creek, you're approaching the creek. I got the put like over here, and I'm kind of annoyed because you can see like this would have hit, and it ended up being a head fake, which I thought might happen. I even posted, I was like, oh, it could be a head fake, and then it head faked. And I stopped out, so I actually lost money on that put right here. I stopped out, around 10%. I think it was 11% loss. It was $50, but, that's not horrible. And then, interestingly, it dumped afterwards. I probably would have made pretty good money on it. But anywho, you live and you learn, right? So I'm trying to take every single situation into account and say, all right, what did I do wrong? Maybe did I need to have like a different kind of stop on it? I was really looking at a stop that went above this top, and it ended up doing that anyways. But I had calls as well, so those did really well overnight. Those went up quite a bit, 30, 40%, and then I sold them this morning because I figured this was going to happen. And I bought for an extra week out the same ones. So I traded in and out. That's another thing I've been doing is like I've found really quickly that Monday, Tuesday, if you get a nice pop and you've got a really solid call option and it's up like 30 to 100%, yeah, you can ride that sucker and hope for the best, and it may end up being a huge green week and you could really make bank. It may stay elevated, but if it's expiring that week, one thing I've been doing is like, all right, if it's up Monday, Tuesday, and it expires on Friday, I get out of it Monday, Tuesday, I take the profit, and then, which has been happening quite a bit, almost every week, I take the profit, and then I wait for re-entry, and I buy in again for a following week out. So that way I'm not worried about things getting crushed. And so I'm never going past Wednesday as best as I can. I'm never going past Wednesday with something that expires on Friday, which I think is not wise. I usually end up losing money on those. And very rare cases, like on Tesla, one week it was down and then it rocketed on like a Thursday, right? This one, that was one. I don't remember having a lot of expired calls, but anyways, so those are like simple little lessons. But yeah, I mean, the biggest winner this week was Roblox. And this was a weekend trade. I bought it the week prior and then held it over the weekend because it just didn't break out, but I knew it was going to, or at least I had a strong suspicion it was going to. And it ended up being a 250% gain. Started off the week with $400 in my pocket. And then Tesla, like the same day, another big one at 70%. And again at 90%, kind of exited them at two different times. These are two different halves of the position, same position. So I got out pretty good. And that was it. I mean, the rest of this week's been pretty average aside from those two big ones. But I did it. Like I made my goal, and I'm also tracking those average gain percent, average loss percent, total percent gains, average trade price again. So I'm trying to keep it like a little bit higher every week. So this time it's 300. This one was 250 and I got pretty close. I got like 230. And this one's 300. I'm a little over, so I'm trying to be careful not to overextend. But that's like, what are you buying in at? Like making sure you're not going way above the top. Just simple stuff. So these are the setups. And again, like now you can see that the cost has gone up for entry. They're not like they were in the first week. My entry was on average less than $150. By the week 3, I'm already up 300. So now my entry is about 300. Well, why am I doing that? Because again, I'm using like that quarter system. And I think that's helping me to scale because my goal is to do the 100% every week. I don't know if I'm going to hit it every week. It may not, may have some bad ones, but um, I don't want to say that it's easy to trade. That sounds really like arrogant. It's not easy to trade. It's taking me a huge amount of mental energy to focus on these trades and to get the good entries. But really what I'm looking for is basic like retracement stuff. So like this, for example, right here, this was a really easy setup. So when it popped this morning, I already knew like on the big picture Tesla, it is just an example. It's not going to take very long. I'm kind of done talking about it anyways. We'll move on, talk about some other stuff here in a minute. But I already knew like this is kind of working itself out along certain waves. And I had a suspicion, or I should say not even a suspicion. I had a very strong, and there's, again, more than one way to look at this. But I had watched this walk out from this giant wedge. It has a target that's pretty high. So now I'm just waiting. All right, there's a major target, which means it's got a bull trend intact, which it definitely has. It has higher lows here. There's a bull trend intact. It hasn't dropped off the face of the earth. I have a Bulkowski target that's pretty high, up near like 350 plus, which is where we are now. So like we're starting this trade. I started it a couple weeks ago. I mean, I didn't start it here. We're looking at that massive retest on that huge creek. All of this would tell me that there could be like some pretty big drops here in order to do strength tests. But right now it's in an uptrend. So on like the big picture, it's in an uptrend. And then when you get down to like the nitty gritty, it's kind of working its way out these waves. And I've got just like a really simple idea of like waves here. I mean, you don't really even see it on the chart, but that's what I'm thinking about. It's like, where do those waves connect? Where is the cross here? That's important stuff. It's not, I talk about it on the channel all the time. It's not just, and this is just me putting it into action, right? So these are really simple concepts, but the idea that, yeah, there's a wave here and it's probably going to hit that top from down here is not like a joke to me. Like it's not just some academic exercise. Like I really think that's going to happen. So it's really just about getting in on the right moments. We're right there, right? We're about to get there. And it may go beyond that, but that's just a simple way of understanding it. And then you look at this in terms of like a larger trend, and it's like, yeah, this is already forming out like a pretty large trend here. It's been in this uptrend for a while since the bottom. And there's a lot of lines right now, but the simple way to understand it is it's just a big uptrend. So that's it. Where is it in the uptrend? It's kind of on the bottom of the uptrend. So the top of the uptrend is really high. It's like 500. That's about where all-time high is. So you look back and you say, all right, well, if it's going to get there, it could take this entire time. Maybe it moves faster, but then you just kind of look at the waves and it's just timing, distances, etc. And I've been doing a lot of that in my day-to-day time. The big one right now is like where you are on the ceiling right here. You have to pass above this area. And previously, when Tesla jumped above 330, it went all the way up to the top. So the last time it traded up in this region, same exact area we are now, we're at 350, but yesterday we were down here at like 331 and 340 area. Well, not yesterday, but a little while ago. That region right here is where the last time we had an SOS was in 2024, and it pumped really far, really fast. Now, I don't necessarily think it's going to do that again. I do have that version here. I measured it out. But like, all right, so like big picture, it looks good. And then small picture, this is a really simple one because Tesla likes to buy up off the 50. Once it's in an uptrend, and it's happened repeatedly, like over and over again, almost every single one of these uptrends is the same. It comes back and it settles on the 50 RSI, and this is probably true for a lot of tickers, not just Tesla. But it settled on the 50 RSI, and it has a long time. It still goes another like 50% of the move, if not more, while being in this kind of higher overbought region. So in theory, like this is backed up. It didn't quite get that low. We might be in this kind of a situation here where we're kind of consolidating into a higher mark. But it's got plenty of space. There's time, and then I'm looking at bear side, like where do bears maybe want to go? They had targets down really low at like 330 for these waves. But then I'm just kind of watching day in and day out, every daily action, getting smaller and smaller. And then I'm looking back at this as like a potential inverted head and shoulder motion. And I'm like, well, where are these trying to find supports, right? And this is where things get kind of interesting because you can see that there's a potential S curve here. So that's like a forward thinking motion. There was an S curve here. And that's true. Like that there is a symmetry to the market. This is another thing that, again, I've had people tell me that this is not a good way to trade. And I'm like, I'm sorry, but like if you use wave analysis, you find that most in and outs are fairly similar. They don't have to be perfect, especially if you're smart about it and you're not sitting in a trade for very long. That's an S curve down. So the expectation of an S curve up, it's not unreasonable. Now it's possible, like this is an M cross right here. It's possible this dumps. So that's always in mind. Like this could go bad. We know where the M cross on the S curve is and it ends up being bad. You're going to be in a bad spot. I think it's possible it's already happened, that this is it right here and that we're kind of working out the rest of it right now. If it holds up, it should just go. But look at where those levels are. And then look at that parallel structure. It's really simple. So where am I looking for trades? I'm looking at like volatile stocks, stocks that have cheap enough buy-in. I like things that are like 30 cents per contract, but I'm not necessarily like only getting those. I'm also looking for things like Target where it has these massive dumps. Like this is a disproportionate dump. Like I understand the retailer is struggling, but this is a humongous drop. And there's almost no way, like there's like almost like a snowball's chance in heck that this is not going to recover that, at least to some degree. And it's like, all you had to do is look at this, draw a 50% mark, and it was like immediately that's the first trade. It was like, there's the 50% right there. It's super simple. It's a pure auto reaction. If you buy in low on that auto reaction and it go, well, what if it doesn't go up? What if? I mean, that's trading, right? Like you have to have the plan. It's always possible things don't go your way. So like I'm doing pretty high risk trading with option swings and some share swings, but it's pretty high risk. I mean, you can say whatever you want to say about it. This is a potential right here. This has potential to come down into a spring, for example. So if I'm buying in right here thinking that, yeah, it could rebound and just go. Yeah, it's true. It could, but I could also be in a situation where I'm not holding on to a bag. So I have to know like what I'm getting into and have a plan each time. That's why I'm only really focusing on a few tickers at once. And the ones that are working are working. Like Roblox was hot for a minute. I traded it for like a few days, you know. Now I'm like, meh, you know, it had this huge breakout moment. I don't really want to chase it, so I kind of made the money that I wanted to make. 300% on a swing is amazing. So I was like, that's a great trade. But I'm not going to keep trading it. You know, I don't know what it's even doing right now. I don't really care. Like, because to me, I was like, that was my goal, was to hit this one marker, and it hit it. Was like 123. Ended up going to like 127 or something. But I was like, you know, I don't really care. So I'm finding plays one of two ways. And I could do that. I could do a how do I find plays kind of thing. But actually, the best plays that I've had have been found by other people. So on the Discord group, Mr. Momo has given me both Roblox and Target, which have both been really good plays. Tesla is just Tesla. That one just had a major retracement with a possible breakout. Microsoft might be up next. I'm not sure yet. NVIDIA's got their earnings, so that could send tech going if NVIDIA has some serious headwinds. You know, Google I played before that. This is earnings season, so that's pretty easy. You just kind of look at what's there. Apple's the same way. It's a big one. You don't really need to look far. You know, a lot of these were brought to my attention by other people. Wolf, I think Wolf is in a spot right now. This looks really good to me. This like rounded motion where it's like buying up, buying up. This looks like an auto reaction and a phase B top. I could be wrong. It could dump off the face of the earth. It had a miss on earnings, but it's got some divergence right now. It's a good setup. I don't see why it doesn't come up and hit this level right here, which it's already kind of left off of a couple of times. And on the bigger picture, you could see the same thing as like an auto reaction of phase B top with a phase B bottom. That's like a micro, this is like a micro version of a macro setup then. So this to me doesn't look by itself, doesn't look bearish at all. It looks really bullish. And what's interesting about it is this is the one I was saying, like, well, if you look at the big picture, it's the same deal, right? So people pointed this out a long time ago and it went to crap because it basically, they declared bankruptcy and all this other stuff happened. But look at the bottom here, and this is just a drop in, right? And then it has this big reaction up. Where is it hovering above right now? It's hovering above this level like 122. It doesn't take a genius to just kind of go back in time and think, well, why is that important? Is that an important level at all? And there's two markers there I've got marked off. But you can go back in time and just look at it and just decide if you think that this is a good level. And I think that is it a good level to make a bottom on? Because the market seems to think right now it wants to trade across it. So where is that coming from, And you go back in time and you just look at it. And you can find that this is a, if I can get there. I don't even know. Now I'm not sure where it is. You guys are like, there's nothing there, Booksy. Why did I mark those two levels off? Because like you just said it was easy, and now it's not easy. Well, I don't know. Maybe it's on like the weekly or something, because it did have a, I think it had a split at one point or something. There must be a reason. It also might just be like parallels, because I do a lot of that kind of stuff too, like trend-based analysis. No, it must have had a split, because on the 4 hour it's not there, but on the daily it is. So I don't know. I'd have to go look and see what that's about. Or maybe I just didn't go back far enough. I think the 4 hour stopped like here. So maybe it just didn't go back far enough. Anyways, you go back in time. This is like the original bottom of the stock. It's the same level. Like right here, this 119 area is the actual first like bottom. It's where it took off from right here when the IP was created. So it's basically just hit reset. So yeah, if I were to do that and then look over here and saw something like this, where, it has like a dive in the middle and then it comes back above and now it's consolidating. I mean, yeah, there's a possibility it's just going to dump. Don't get me wrong. But if this ends up being even remotely bullish, it's probably going to at least try to come back up in a little motion here. That's kind of where I'm at with it. It's like, and then possibly go further. Like that could be a breakout motion that then continues, off of a floor. So that's what I'm looking at in current time frame. And then when I go in and zoom in on it, I'm like, oh, well, it's got the iteration motion. It's not really, it's kind of chopping on the bottom as if it's got no volume there. Like every time it's getting really low, it's got like bar coding going on, like right in this range. I don't see it as impossible that it drops below it, but I do have a strong feeling that that's probably why it's holding up pretty well on that level right now. So I had thought that if this came back down and it held support here, that it'd be a good buy-in on the big picture, and then also possibly coming down as low as 70 cents. That could be another area. So why couldn't this just be like an LSPY and then just drop? There's Wyckoff terms for you. It could be, but I think that there's, it made a slightly lower low right here. I think that's probably like a phase B. This is a decline, auto reaction, phase B top, phase B bottom. So yeah, it could have a spring. But then what's interesting about that, in addition to what I just said, is that this kind of presents itself as the exact same thing in the short term. So I find it to be one of those trades where it's like, is it there yet? No. But if it makes the moves that it needs to make and it gets back above 141 right here, which is where I've got my thing, this is a great trade. Even if you only get shares, it goes from 141 up to 160 or something, you're going to do fine. Long term, there's downtrends. You can see that creek build out right here. That would be like a sort of like a hook that just doesn't go anywhere. You can see the intersection of that rise, and then that obviously this trend going up into the trend going down. There's a pretty bold intersection right there. It also triangulates with this cliff level from like this S curve, which is like a 50% retrace kind of level. So you can do like basic stuff and just confirm then, yeah, that's about right. I mean, that yellow marker right there at 160 is the halfway point on this. It's just a retracement. That's just a bearish retracement too. That's not even like a bullish move at that point. You could keep doing the parallels and say like, well, I could think keep going. What's going to happen? I don't know for sure. But if this is a decline with a reaccumulation, if it ends up being that way, then sure. The next one up is like up here, $2, that intersection. That's the top from that phase B. That's where your SOS would need to be. And that's where the creek is. And that's where this trend is on the halfway point. So, I mean, that's over here in September. That's not that far away, guys. It's like September 9th. So does it have to get there? Sure, it doesn't have to get there. I mean, you could have like a drop down here and have a spring at 120 something or hit the gap fill or something like that. And then it could still take a minute, to sort of work its way back out. I don't see these as like one step kind of situations where it just goes straight up. It's probably going to have some shake. But if it does these moves, then you just need to know where to enter. This is pretty straightforward. And then at this point, if this happens, there might be some news that would cause that to happen if it's going to do this. We don't know that for sure. Maybe it has to do with the CHIPS Act or something. Then that's a good place, to really see it go. So I'm not of the opinion that these are very well hidden. I think really any trade, and the ones that I found that were pretty good, pretty easy to do, I just looked for big moves pre-market. Like almost all of my major trades have been almost. The Roblox one was a really good final setup. It's either something like this, where it's coming to the end of a range. That's a good setup to watch. You don't have to enter it. You can just watch it. And imagine if this makes a spring, this is going to be divergent. So if it does happen to come below 124 and the RSI stays high, that's a divergence potential right here. That's a big deal for what would then become a possible spring motion. That's a huge deal. So that's a really good setup. So if it's either at the end of a motion, which again, Roblox was like that, versus something like a target, which is really just, I just do a screener pre-market for big movers that are within a certain price range. That was it. It was that simple. I didn't do that on Target, but I did it on a couple others that gave me good trades. And it was just like Target, where it had this massive drop. And you could see that pre-market, oh, it's down on huge volume because of earnings. So then just go look at the chart and see if it makes sense to trade it. Would it probably make a 50% rebound here from 94 to 99? What are the contracts priced at? Why else might it go to that price? Like this is a previous bottom over here where it took off. It literally broke the creek at 99. Last time it jumped the creek right here. So of course that's an important level. It's probably going to hit that. There's also a downtrend that's kind of heading that way. There's just all kinds of reasons why this should have come back up here, to this area. It's like painfully simple. And so if it's way overextended, you're like, all right, you're going to have to take a chance at some point, and play what you think is the most probable. So I haven't really been doing a lot of charting beyond like what I'm doing with trading setups. And then if I don't have a good setup, I am a little bit lost, One of the things about day trading that's not been very fun, and I'll switch over to AMC, GME and stuff, is the amount of mental energy it takes. Like, you would think that this wouldn't take that much energy. You just set an alert and leave it. But in order to kind of see it through, you have to sort of know what to, both up and down, and then really have a game plan. Again, like knowing that this could come back down, understanding where this is in the scheme of things really changes stuff. Like we were looking at Nike the other day, and Nike's fine. There's nothing wrong with it except that it's got this bearish divergence on it. So it looks like it's bullish, like it's in an uptrend is what I'm trying to say. And it's got this bullish divergence on the, oh, we're dropping right now, data. That's wonderful. How many minutes are we into this stream, I wonder? About an hour? About an hour into the stream. I'm getting a drop. Okay, curious. I did call my internet provider about the 1:30 p.m. drops. They didn't have any answer for me, which is unfortunate. They said it was maintenance and that there was an outage, and I was like, yeah, but this is happening like every day. So are you telling me there's an outage like every day? And they said, well, the maintenance people may be working on the outage at the same time every day. And that doesn't even make sense to me. I'm like, so it's ongoing? Like, what are you even saying? Anywho, so yeah, I mean, there's obviously danger here that you can anticipate. It just takes a lot of mental energy to make sure you're not kind of wasting your time with the trade, but also you're getting the entry and you're getting the exit that you want and you're paying attention. Because if something like this goes south, which is happening right here on Tesla, and you're kind of already in the play, well, there's a possibility that it's fine. I didn't think it wouldn't come back up and retest the top again. I think that seemed pretty unlikely to me. So I was like pretty sure that wasn't going to happen. But you can see right now it's like walking through multiple layers here, and it did drop beneath the creek like it wanted to come back down, so it signaled that downward motion. We'll see. But what point do you cut it loose, right? You need to have like that in mind. So there's a lot of mental energy that's been going into it like every single day. Some days I sit in front of the computer pretty much the whole day minus the break, and then other days it's been a little bit more relaxed, but it's a job. So, I mean, if you're going to treat it like a job, you should be comfortable, like just working it, and doing it. It's not going to do itself. So I feel okay with that. Like, it's okay. It's taking up a lot of mental energy and time. I don't think it should be super, super, super easy. That wouldn't make sense. It just wouldn't. So anyways, so like talking about AMC and GameStop now, and I'm going to be as kind of a brief as I can. I'm trying to clean up my chart. I might do a quick video on it this weekend. I don't think it's going to run till, unless there's something like news-wise that happens between now and GME earnings, like an early announcement or some kind. I don't think there's going to be anything that happens particularly positive before then. I could see something negative happening before then, but I don't really see it as like overtly positive just yet. The big idea here is the news that GME earnings, why is that way over here on November? That's messed up. What is that even? It says November 25th. Well, there's another one. I don't even know why. Oh, did they already announce it? What is happening? Why is this all messed up? Oh, this is, oh God almighty. Lord, my brain, scrambled eggs. This is AMC. This is not GME. I was like, why is the earnings already happened? Panicking for no reason. GameStop announced that their earnings was going to be on the 8th. There's a memo out about it. You guys, I have no words to describe what I'm going to say except that, and I'm going to avoid the I told you so stuff. I don't think it's wise to say that, especially before something actually happens. But there was a sense in which I didn't estimate when they would announce earnings, but once they announced it, I was like, yeah, that makes sense. The reason that makes sense is that if you look backwards, we've been talking about this for a while now. Now, the 3rd, it wouldn't have made any real difference, because if they said the 3rd, I would have been like, it's this date right here, right? It's right there. Okay, but they said the 8th. So I went and looked, and I thought, well, the 8th is in a 2-year backwards motion. The 8th is right here. That's where the 8th closed. It's at $7. on the 8th. Why does that matter, Booksy? We talked about this like wave concept, right? And ultimately what we talked about, and I don't have the price targets built out here. I didn't put them on the chart. But we've been talking about this for a while, and that my expectations are much lower than some people, and I don't think it's going to go to $20 in one fell swoop. I think it takes 2 motions to get there. And I've been saying that I think that first motion is probably lower than expected. It's probably between $8 and $7. And we were looking back at this area right here. Right? Like we talked about this like a long time ago. And like not forever ago, but at least for the last 6 months or so, we've been saying, yeah, at least Booksy's been saying he thinks it's going to be more likely this area that may not even make a higher high, which kind of bums some people out. But at least initially, the reason for that would be that you're probably going to push up here and then come back down to like 4 or 4.5. So wherever this happens to be, right? And there's all kinds of other lines here that I'm not drawing, right? But this is basically what I was saying is like it's probably going to accumulate over the top of, and that's too low, over the top of this 5 to 7 range. So it's very interesting to me, being that I've been blabbing about a 2-year cycle, that 2 years ago on September 8th, we're at $7. It's also very interesting to me because we were talking about how the 25th through the 11th was the likely window that we were going to see where that 2-year completion happens, and that we might be in a spring mode at that time, depending on what happens. We need to just take it for what it is. Like, where is the spring, right? Maybe below 246, maybe 226. Doesn't have to be in the gutter. Doesn't have to be at $1. It's just somewhere beneath the floor. So it's not about this being a perfect parallel structure or something. Okay? So don't get me wrong. You're going to look over there and say, it's going to be at $1.30. Well, that's not quite right. You know, it's really more about the overall idea here, which is that this is a big wave. Within this giant structure, you have a very high likelihood that this was an angled wave, which I've talked about. And once you break this, you're going to be doing this move. And I don't know for sure exactly what it's going to look like, but this is essentially like a short covering kind of move. Okay? And again, take it for what it is. There's obviously a couple different ways to measure this, but take this move into consideration as, all right, that's the exit of the big wave down. You finish your accumulation. You leave. That's after you break this top, right? Show me the magic, Booksy. Show me the magic. I will show you the magic. You will get all the magics. Egads, Booksy. There it is. Maybe even higher, right? Because if this breaks from the top here, this could go up to 1095, right? Well, that's not that magical, is it, if it comes way back down? Well, it is if you think about the grand scheme of things, because looking at where that is, again, at 1095 or thereabouts, and it's just an estimation. It could go a little higher than that. That's basically right there on the bottom, 29th. Again, cyclically, that we're coming back. We're moving downward. This is kind of filling now the space. We've already traded all of this except for this one region. That's a macro creek break region right there. So, like, I find this to be a very, very straightforward setup for that reason. So then when we go back and we look at this as a macro setup, we're like, oh, look, there it is. Like, this is super straightforward. Again, you've moved the distance that you need to move. Has this happened before? Could we have been in a situation like this before, and this is just another situation? Yeah, we have. We've been in similar situations. There's something back here that happened as well. Remember, it was like 15 to 19, but it didn't break, right? So you have situations like this that have happened before. This is not like the only time this has ever happened. But this is a very significant setup in that if you look at where that drop zone is, and you look at where we need to trade, and you look at the wave analysis, and you look at the timing of it, the 2-year cycle, and all this jazz, it should be in a spring mode by the time we hit that marker. right around earnings. It doesn't have to be perfect, and it may not be perfect. It could take an extra couple of weeks. I don't know for a fact that it's going to be up there on like the 17th versus the following week on the 30th or whatever, the 29th. I just don't know that. That's too close to tell. And it would be unwise to try to predict. But if I did think that this was likely the window, and it ended up being the window, that it was a 2-year cycle, then we've got a really good chance that that's probably where it's going to be. Well, what other evidence do you have that that's where it's going to be? This one, remember this? What the, you might be saying. How is that even possible? This is like the middle of a, and this is where things get kind of interesting. This is the middle of a massive kind of S curve. We don't really draw it like that, but it is one. And there is a sense in which we've done it when we did this kind of a thing. We've done this a lot, right? It kind of gets old, but we've done this before, right? And I've talked about that motion down, and you might be saying, well, that's kind of boring, at this point. We've done it so much. I know, but this matters because this second ear didn't go that high, but it went higher than expected. And I think the reason for that is quite simple. It was distribution, but ultimately that motion right there is a defining motion for a wave, because in the midst of all of this, this often defines direction. You can even define it a little bit better, perhaps doing something like this as well as a potential and saying like, well, I think it does this, right? Maybe it only hits here. Who cares? $7 is $7 either way. Right? Well, if it only hits $7, shouldn't we bring this back down? Wouldn't this be a more accurate, Sure, but like look at where the spring is pointing right now. Like structurally, if this drops into a spring and it goes low beneath the floor, if it hits $2.26, hint, hint, nudge, nudge, I didn't make this crap up, right? I found it with a backwards formula that 226 was a likely indication of valuation at $1. Look at where the intersection is on this. It's basically the exact same. It's like 227, maybe 228. I mean, that's pretty great. And if you take that break measurement from that point, let's say you didn't want to do it from here, which that wouldn't really make sense to me anyways. Like I would do it from here, from the breakout, not from really from like a 319. There's other reasons why I would do 319, but I would do it from 319 personally because I think that's a more accurate one. But if you wanted to do it from 226, you end up with basically the same target. It's the top two regions right here. So there's really no question in my mind like, yeah, this is wound up. Like that's the proportional move, and it has a cause built up for it. Why would we do that? Why would we do that? We need to have a reason to do it. I don't know what the reason is. Maybe they didn't have another reason except GME earnings or GME squeezing, and that's what everyone's going to say. Maybe there's going to be an options thing that happens here. I don't know, but we don't have another reason right now. I'm not looking for one. Wyckoff theory is about cause and effect, and the idea of a P&F chart is built on cause and effect. Do I think they have enough cause here over the course of like a year and plus to break out and go back towards this top and go back? Yeah, I do. If this is a bottoming action, why the heck not? Like, I'm sorry. I get real snarky with this kind of stuff, but like sometimes people get on me and they're like, we need a reason. You can't just say that it's going to happen. I'm like, yes, I can. Well, that's just saying that stocks go up because they go down. They do. Like, but they're not going up because they go down. That's not exactly right. There is reason behind that because if you go down, people might buy more, right? When it's cheaper and they'll push the stock back up. It also has to do with going back and retesting liquidity levels. And that's the big reason why if you go down without checking a liquidity level, you have an expectation, hint, hint, nudge, nudge, like May, where it should come back up. The same thing applies to downside. We didn't have to be, again, it wasn't exactly a pleasant thought in anyone's mind, right? Nobody would have looked at this and been like, that's going to be fun, except for maybe shorts, right? But there's plenty of people that were like, I think this thing's going low. I was one of them. I said, I don't know, man. That combined chart looks really low. It makes me nervous. It's going to drop. Look at where we are in relation to where that creek was, like that liquidity retest. We're right there. You know, it's not that we look at these things and we want this to happen. It's nobody's looking at this thinking like, boy, I really hope, you know, unless you're just kind of a masochistic, I really hope it drops to like 190s, you know, or whatever. Like, of course not. But there's a reason that it might do that. Well, why would we go up first and then drop there? Why would we do this push up? Because it didn't back test 4. That was, and again, a completely different situation right here where it hadn't gone back up, and check that level. Also, because you want to hike up the buy-in, you want to trap people so that you can get selling pressure when you break through here to come down. Looking at all this stuff in combination gives us a little bit more confidence that we're on the right track, because things start clicking. Like it's like a clockwork puzzle, right? And it's like the gears are just snapping into place. This is not a, in my opinion, it's like I look at this and I'm like, okay, where's the 50-50 here? You know, like that's a possibility for sure right there. There's definitely an anchor right there at like $3. If you go from the top here at like 40 something, 405, 406 through $3, the bottom is like 226. That's the number that you got as the shift value, Booksy, that you joked about as saying that might be the bottom. And I said, yeah, I don't know why, but I think it might be the bottom, because I think it equates to about $1. It could be 225, something like that. What about the lower mark at like 292? Why are we doing? Well, 292 was the previous floor, at least from numbers standpoint. You drop down from there, it's like 210. You start looking at that, you can start looking at things like the maybe the more narrow trend here, and then also the ideas of the macro. I just drew it out and deleted it, but there's a macro build out that may be pointing more towards like $1.82 something. So you bring this price up, and then you basically get people really excited. And if you want to make the strength test, you do it. And if the strength test is, you know, needs to have sellers, if there's plenty of people willing to sell on a sell down here, it's going to drop. And that's exactly what a strength test is about. It's kind of like a final shakeout. So you've loaded up. We know this because the on balance volume has come up like incredibly here. It's like at an all-time high right now. Well, not all time, but high since the May push. It's like the highest it's been. It kept pushing up. Right? So like we know that this has been happening. Like it's right in front of our eyeballs. It's coming down, but the on balance is going up. Naysayers are going to be naysayers. Well, it needs to have a reason. All that stuff doesn't matter. I don't care. Technicals point to the supply-demand aspects of the stock. If you don't believe in supply-demand and you think it has to be this or that or the other, I'm never going to convince you otherwise. This is going to happen. You're still going to be like, well, broken clock's only right is right twice a day or something. I'm like, all right, whatever. You know, at this point, I don't really care. I'm really looking for this as the exit of AMC for me. Like, I'm kind of done with this trade. I'm happy with it. If it makes this push, I'm going to make bank. I'm going to be okay. And then I think that there's a possibility that we actually run up into December, weirdly enough. And that's where we finally top off at like 1960 right here. So this is what I've been saying for a little while. Now we have an announcement that earnings is on September 8th. The 2-year cycle would mean that that's $7. I mean, come on. Like, really? It's that level we're going to go back to. Really? You think we're going to go back there just because it's been 2 years? No, not just because, but we also had a similar, like, the operators haven't changed. You know, we had the same markup here. Like, that's what I've been trying to say this whole time, is that, yeah, fractals are fractals. You can look at those things and kind of be dismayed with them and say, well, I don't like them because so-and-so uses them and they were garbage. You know, they did a really good job and then it was terrible. Yeah, I get it. This is not meant to be perfect when we do comparisons. But the idea here is very much the same. Like, this is still a wave bottom. that stretches over like a 2-year span. Like that's what it is. So if you know how to interpret a bottom and you see this on a chart and it's got the same big operators, your BlackRocks and Vanguards, yeah, you can doubt it all you want. You can say there's no reason for this to have happened. Or you can just say it's an accumulation for Pete's sake. And it made the right moves when it needed to make the right moves. It did the strength test here and then it left over like a 15-day period. It's not that complex, right? If you want to say it's not because of that, it's because of all these other things, fine. That's your choice. And then when I look back and I'm like, oh, well, look at the triangulation here on the middle. Well, that's just an accident. Like, yeah, all right. Well, you can say that if you want. I'm not going to sit around and pretend like everything in the market is just willy-nilly happening on accident, which is kind of ironic because a lot of the people are saying that you can't tell these things. And I'm like, it's right there. Like, it's right here. This is the middle of the wave, you know? It pushed up and then it did a UT at the end and came down for the spring and it did it again. Like we have actionable evidence right here that this is pointing the direction that this wave is going to go. This is a 2-year cycle. So I started doing these measurements in about December of 2024. It's been a while. And I started doing more and more of them. This is the kind of setup I look at and I'm like, nah. It's essentially the exact same setup. The problem that I guess we're going to run into, and this is where I'll probably hit some even bigger pushback, is this idea that like, well, if you think it's the exact same, why do you only think it's going to like $20? Why not go like way further than that? It's a good question. I mean, that certainly is the same angle right there. At least that angle looks really good. That's the same line. I just dragged and dropped it. Well, why do you think it only goes down to, let me flip these. Why do you only think it goes to like 1960? Why would it be significantly weaker, you know? I've kind of gone through the gamut on this. I feel like we've done this so many times at this point that I don't really want to like keep doing the same thing over and over again. I do think there's reason to believe that it could go way higher. But I've also got a pretty strong inclination that, yeah, it could, but there it is. There's the breakdown. So this is the ultimately like where it was having the drop in right there. And this is below it, and then this is on it. So we're going down, man. We're going way down. I don't know that for sure. I don't. If you use the same markers, it's probably going to lead you to some different conclusions here and there. I'm going to stick to what I've already got for now. I think it could go way low, but I'm also like, I don't know if I really care at this point. I think the target upward is the same regardless. You know, we look at these things and we can see what we want to see, sure. You could say that. Or you can just say, you know what, if this is the bottom and this is the bottom, there's probably going to be some similarities. And that's where I'm at. But why do you think it's only going to go to 20? Well, again, the first move is the first move, you know, and it's not measured out, in my opinion, to be huge. Other people are going to look at this and suggest, no, it's going to go to 20 in one go, and then it's going to build out above 20, and then it's going to go again. That's where I was a while back, where I thought, yeah, it's probably going to go to 20 and then kind of build out here and go again. But as time moved on and I started looking at this with the shift values in mind, that's when things changed. And again, I don't want to be the broken record here. I promise I'll talk about GME. GME is actually really important for this conversation right now. And AMC is important, but it's kind of secondary. Like we've already talked about AMC a lot. GME is actually more important right now for this conversation that we're having. This drop-in value of like the 226% that we measured, I'm estimating it. I'm kind of like putting it in a, I'm not really putting it in the right spot, but I have to kind of get it right or else it's going to be like way off. Might be close. So this certainly could have represented like this could possibly represent like where we go in the future. We could be at like $40, you know what I mean, by the end of the year. We had talked about this though quite a bit, and the conclusions that I came to were not like my favorite. You know, there certainly were reasons that that could end up going up really high, but when we started looking at the shift value, it sort of changed my perception on things because, and I'm not, again, not going to belay the point too much, but essentially like this markup here is really what I think represents my thoughts now, which is that, yeah, like that looks like it could go all the way up because on the chart, there's no shift value. But if you take the same values that we're talking about here and you apply them to the shift, and that's the way it looks, it's kind of like the shift is doing what it should be doing, which is going back to here. But then you're basically saying that the current stock is going to do all of it. It's not going to keep the shift. It's going to ignore the shift and go all the way back up to that 40 gap. But the truth is, in my opinion, is an opinion. You don't have to agree with it. I'm okay with that. My opinion is that shift matters. So instead of us going up to that the valuation matters in that regard. So instead of us going up to fill this gap way up here at like 44, we're really only trying to get to here. And that's the same value. That's the shift right there. And that might be a little confusing, you know, looking at it right now, because we're like, well, you're thinking in the future it's going to still like obey this kind of weird gap principle. Yeah, because I think that what the chart has done here is build a case for filling this particular gap. I'm not convinced that it's going to do that according to like the way the gap used to be. And I've already made my case as to why that is. So I'm not going to go through this again. I think it's going to go to the gap, but I think it's going to go to the gap that's at 1960, not the gap that's at 60. And then the other reason for that is because I think that on the big picture, this is not necessarily where you break out. And the idea of us coming all the way up here is almost unnecessary. It's like if you were able to do this and it doesn't match what we see here, which is just plainly lower. I mean, it's that simple. It's not as steep as this was, which is a big deal to me. I think that's a huge deal. If you look at this and you think, well, this is up here in November, December, that's great. But then where's it going to go after that? Well, and it breaks down in March and it probably heads low. And it probably comes back and starts retracing back to creek levels. This just looks like a gigantic, like M-cross to me, which is more logical to me. I would think that you would have another version of this here, which people won't like, but I don't care. It is what it is. I genuinely think that's probably what's going to happen. You're probably going to get another iteration, and they're going to work it down low again over time. Was why not? And then you have a massive bottom. Then if you want to go all the way up to that $100 area right here in that pocket, you can do it. I think you have plenty of ammunition. That's my thought. Other people are going to look at it again, like I was in the beginning, and just say, well, I think it's just going to make that move again. So it's not complicated, right? It just makes the same move. I'm not going to count on it. That's my 2 cents. There's more to that than meets the eye when you look at GME, because, and this is a messy chart, but GME has a very similar setup to AMC, and I went through this in the last stream. I do not want to repeat it all again, so I know that I often do repeat a lot of the same things. But again, I really want to focus on why that September 8th is so significant. Because I went and looked, and I thought to myself, wait a minute, let me go back. And this blew my mind a little bit, guys. I'm not going to lie. And you know that I'm easily excitable when it comes to stock stuff. But this actually like opened my eyes. I was like, whoa, that is very significant. There are two competing levels here on September 8th. So one is $18.50. $18.50. It's like $18.51, but who's counting, right? $18.50. You know why that kind of made me smirk was because when we were looking back and we were looking at like where this might drop down to, I had done a few different markers, and one of them was like 18.5, the other was like 17. That seemed like a little bit of a big area to me, but if you look at where that is, right here on September 8th, that area right there at 18.5, that's only if it drops down again. There is an SOW here, guys. I hate to say it. There is one. It is possible, because this made that higher push and then drop lower. It is possible there's a lot of sellers here, a lot of short sellers and sellers that want to drive the price down. It's definitely a possibility. There is absolutely this possibility. Now, I know it made a higher high on the whole, but I still think this is possibly very significant that this was pointed down. But notice where that is on September 8th. And then go to the macro chart. And I'm doing this analysis like a few days ago, like last week. And I was talking about how this is essentially like the same exact setup. It's just like what I was saying on AMC. Yeah, it's even bigger looking, honestly, than this setup. But that's because GME is a little different, the way it entered the bottom. But the way it traverses this range right here, this kind of mark up, down through here, this is the exact same as like what we're doing both here before the May move. It's identical. If you look at the marks as it comes through here, it's identical on these parallel structures, except for what? One thing. Well, it's not identical then, Booksy. I know. But it's identical except for one thing, which is that in May, we didn't drop below here. We didn't come below that mark. Now we're set up higher, and if we drop below that mark and we return to the September 8th region, which is at 1850 or 17, which a lot of people have called out, by the way. I'm not the only one saying that. There was a lot of people talking about 17 coming back to here. Notice what that does on the big picture. It actually hits like right there. Right on the dot. It hits that trend. Well, I don't want to do this, right? I don't want to like have this long form like walkout. All right? That's true. Like it could, this is a possibility. And I saw another chart, I think by Richard, what's his name? Good guy, really smart. And he was sort of like that. He had like a big push up and then down again, like a big pump and then a second dump. That would be as supporting the idea that this comes back and has to like kind of chop on this again, like this top right here. I don't think that's a wild idea. I think it is possible, but only if they do something like a dilution, only if they decide to sell again shares. I don't think it's going to happen unless they do that. So we'd have to kind of guess that that's what's going to happen. I could see that as a possibility if that happens, that this comes back down and like needs to retest 22, which would really stink because it'd probably only hit like 35, 38, 39 maybe, and then it would come back down again. It would be bad. There's a couple reasons why I don't think that's going to happen. There's a couple reasons why I do think that could happen. One is this could be a massive bottom, just like it was in 2020, in which case the higher high followed by the retest on the floor, if this is like a phase B bottom at like 21 in this area, that would make sense to kind of hit that higher high and then come back down and test it and then go again potentially in like November. Sounds familiar, right? That is very familiar. That's basically the same thing we're saying here. Now, we don't have AMC coming all the way back down from $7 all the way back down and staying at $4. But a big part of the reason for that is because we're kind of assuming certain things about this setup that I think are reasonable, but you have to then be like flexible as well. Like one of them is the VRVP, which is your volume range. And that's just like, where have we already traded and where have we not traded? Now, if you go too big, it just looks like a one big fat bar, and that doesn't really help you, does it? We should probably be on like the hourly or something to at least get an idea of where that is. So here's the rub, right? There's two areas specifically that AMC has that are very likely candidates for a buyback in. Right now, I mean, it's like painfully obvious. One is right here at like 372, right there. That's That's right on top of the creek, right? Would that be very similar looking to what we just saw on GME? If it popped all the way up there and then in November it went again, it popped all the way up to like 7 and then drops all the way back down, would that be really similar to what we just saw? Yeah. It's also the only other area here that has like a lack of liquidity that we would, whatever. Alternatively, if it holds the top, and this is where I think you kind of find that there's a continuity here actually, because it really has to do with whether or not it drops this $4 area. That's the same thing that happened in 2020. It popped, came all the way back to near that $4 region, which was not $4 at the time, but it was that upthrust that happened, right? That last hook. That marked off, again, a liquidity range, and it should have, because it's a shelf. That's exactly what it was going back to test. The same thing happened in 2020, again, where it came all the way back down and checked that before it advanced. So it's really a question of like, where do you want to trade? If there's enough buyers and not enough sellers, I think you're going to probably hit low here and get close to it, like 420. Honestly, I don't think you're going to come back down again. You'll probably stay high and elevated, but that makes sense. Again, there's also a region here, and this would be a great place to have a second stage breakout later. It doesn't hurt that there's a similar kind of setup down bottom, although it isn't as fun because it's low. That comes back into the only other liquidity gap we really have, which is right here around 350s. That looks really similar, again, to this kind of idea that it may come back down in a kind of a harsh way and trade off the bottom again going into perhaps November. Okay, well, that wouldn't be a very good squeeze, would it, Booksy? Not for GME, at least not initially. Okay, that's kind of crappy, man. So what you're saying is I shouldn't hold it. I don't care what you do. I'm not saying you should trade it as if it's going here or going here. It doesn't make any difference to me. I'm just showing you that this is a very similar setup to what we see here, where when it did drop, it creates a shelf, right? You can see the shelf. It pumps up. In this case, it didn't even go above the top, right? But it pumps up to this white line, which is essentially like a middle. I've marked it off as such. This is the one that's interacting with everything. As you can see, like the interactions here and the interactions here. It's anchored the same exact way. This is like a giant version of this little guy. If you want to look at it like that, it's the same thing. Dip, pump up, come below, hook, drop. Dip, pump up, come below, hook, drop. Same exact pattern. Different outcome, perhaps. We'll see. This one has a quick reaction off that yellow line, breaks out over the top and goes. This one, we don't know yet. We don't know if it's going to drop low. It could hit $20 and then go. It could hit $18.50 and go. I don't really care. All right, because ultimately, as long as it doesn't drop beneath like that 17 marker, I think it's fine. And looking at the 2-year cycle at September 18th, this is twofold. And that's what I want to bring your attention to, because while we're sitting here talking about these like big picture analyses, right? Like, oh, we've got this kind of big picture of this whole thing. Notice that this also has like a micro version of it right here. If you think about this as like an expansion, right? Check this out. You see that little like micro drop that happens right there? There's another one right here, right before it pushes back out. So don't get me wrong. They're both doing that same thing right here, right before they push out and head to the upside. If you think about it though, from like, all right, as two different pieces, then it seems like it's just kind of an expansion. But if you think about it as like one gigantic piece, then it actually makes just as much sense, because this is like the little guy, right, before it pushes out. And that's really saying the same exact thing. So like proportionally, this whole area, I guess I could use a bars pattern if it helps. Like this whole area right here, proportionally, if you were to like push it out, it's not going to look the same, identical anyways, but it's the same concept, right? You guys are like, that doesn't look the same at all. Well, mainly because we don't have the way this pushed up. We don't have that kind of a extension here. If this had extended up and then come back down and done the cat ears, it'd look identical. But it's different. This has a really high push and it breaks off that top in a slightly different way. But it's essentially the same thing. is what I'm trying to say. The motion of the wave is just an expansion of the same ideas. So this little micro version of this has this kind of walk down motion, right, before the big one, and then it breaks out above the top. You can see where I'm going with this, hopefully. It breaks out above the top. This all starts here on September 8th. It's the same exact time, really, like in this case, it's like August 20th, but it's the same exact timing as AMC. It is. This whole downward motion along this all begins right here on this anchor, which we're now kind of like coming and hovering above. You can see then the motion isn't just an expansion of said things. It's like, it's kind of living it out, but on like a bigger picture. So if this were to drop down, you know, I've already measured it and I don't want to get, again, too much in the weeds here, but this is like a 50% mark, by the way, from the gap that we made down to that 1851 level. So again, another piece of evidence there. If you're like, I don't think it's going to hit 1851. I don't know if it's going to either. This could be a shallow S-curve where it doesn't go all the way down. That happens on the market where it's got the marker, but it doesn't get there. It's certainly a possibility, you know. It's certainly a possibility. But I can tell you that like this gap zone area right here at like 29 down to this anchor in the middle at like 23 leads you to 1851, which is interesting to say the least. Maybe it gets there, maybe it doesn't, but that's there, right? Maybe it's shallow and it just barely dips and then rips. So this becomes like a macro version of the same thing. Now you might be saying, well, if that's the case, Booksy, isn't that really good news? Does that mean that we're going to do something like this? Again, this is a possibility. This is something like this and then just melt up. Because just like here, you have this kind of early reaction. And there's, again, different ways to look at these things. I don't want to make it sound like it's a one-size-fits-all. It's not. But you have some pretty big early reactions to these, and this ultimately breaks out on that white marker right up here at some point. So whether it does it now and then advances versus doing it later and advancing, like November or something like that, and advancing, what the expectation would be is that this then advances and potentially goes up. Now, if it advances later, good news is it's probably going to go up to near all-time highs because that's the marker right there. Advances now, I did a measurement and I checked it, 2-year mark, just like on AMC. If you go from September 8th to September 8th, this little pocket right here is highly likely. And it goes, it's a big pocket, I guess. I said little, but it's actually kind of big. It goes from like September 10th all the way over to January. Now you guys are like, well, that sucks. So which is it? I don't know. I don't know for a fact which it is. If I had to guess, based on what IWM is doing, the small caps, I think IWM and the small cap stocks are going to run in September and then maybe kind of like peak October, November, and that's it. I don't think they're going to keep going. I think that the S&P 500, like in 2020, will have a more gradual incline. One of the things that's very surprising is that it's almost a year later. I don't know if you guys have looked at the IWM in a while, but IWM, which is the Russell 2K, it hits like a peak really early by I think January 2021, which is kind of where we have the big squeeze, right, for AMC and GME. And obviously AMC takes a little longer to get to the top. GME's up there. IWM is actually there for almost an entire year. It doesn't really go much higher. Small caps stay elevated during that time, and they're very flat. The S&P 500 doesn't hit its peak till January 2022. So it takes a really long time. What we're seeing right now is that we're kind of in like a micro version of that. We've not got the same amount of amplitude, but it's really interesting. I was just looking at it yesterday and I thought, yeah, that's a pretty fascinating chart, because if you look at if you take into consideration the fact that the S&P 500 ran the way that it ran, but you look at, I'm going to pull up a screenshot of IWM. This is like where it was again. This is like September, and I think it goes all the way up to like roughly January. This area, I think, is like November and then January or something like that. I don't know. Something like that, right around here. I have to double check. This is where everything breaks down in 2022. The dates aren't on here. That's not very helpful. We're in like a micro version, I think, of the same thing. And it looks like it's either ready to go or about ready to go for the September rate cut. Like that's going to be probable catalyst. But what's fascinating again is that IWM actually reaches the peak very, very early, and then it just sits there for nearly a year, and then it doesn't do anything. The S&P 500, when I did a comparison, looks the same. It looks like it's going to peak earlier than a year from now, right? But it looks more like February 2026 or January, February, maybe March, that kind of time period. If you compress what happened and you look at this as like a micro version of the same thing, this actually works very, very well as like, you see like kind of on the RSI here, that backup. There's a cat ear period, a backup, and then it kind of goes into this acceleration and it's done. Look at where we are right now with the cat ear and that big backup that we just made. We're going to this acceleration and we're done. If that happens in September, small caps may go ahead and peak. And so when you look at that and you think about dispersion or rotation, taking those positions from one to the other, it makes sense that now would be a time to do that when the market's kind of starting a new healthy uptrend. I say healthy, but you know what I mean. It's in a new uptrend. It's been in one for a little while. Now they've got rate cuts. You're going to start taking money from the bigger cap stocks to the smaller caps. That sudden influx is going to bring in a lot of people, but really like the people that make the most money on this are the people that are already in it. This last push is going to be like just to kind of push all-time highs. There's a lot more to this. There's a longer-term trend there, and I did that later. I think I charted it later on in the day. I don't remember which is which here. This looks like SPY. No, this is the second one. This area right here is actually February 2026, but there's a earlier hit here on this middle that would happen in September. And so when you take the two charts into consideration, these are the same ticker, right? You basically have like an S curve that pops up above here and then potentially goes sideways for a little bit of time, and then maybe you get a pop. So I took the same ideas, right? I looked at where those markers were, and I took the same concepts, and I was like, yeah, if this is where that takeoff is, and it pushes up here, and it just goes, it only hits like 280. There's a potential that it has this kind of wraparound at the top, and it's quite steep. And that would make sense as to where that last-minute wraparound comes from in February. So that actually works really well with this idea that AMC and GME have this early squeeze in September, November, through November, that kind of area. And they're already up pretty high. And we really see that the S&P 500 peaks probably next year. But I don't think AMC and GME are going to do that in the same time. This is like highly compressed and it's smaller. So it's like it's a smaller move. Doesn't go as high. That also tracks with GME and AMC. They both have potential to go up, but it doesn't look like they're necessarily going to hit all-time highs at all, even though a lot of people think they might. My initial guess for, in my estimation for GME, and I'll get to that in a second, on this wave right here, if it does pop high, it's probably only going to go to 61, and then it's going to kind of reassemble itself for another move. I don't think it's going to do a move in January necessarily. In fact, I wouldn't even be surprised if we don't see anything else for a while, maybe 6 months or more. And I haven't quite decided on this one yet, so don't hold me to this. This is an extra bit. This wave seems to count out to 2026, going from the drop ledge over here all the way to the top. I don't think it's impossible that that happens, but if you look at this as like a section of time, it really makes the most sense that if it's going to go up here and then have a kind of a chop to the upside, we could end up with a very similar situation, right, as either IWM or the very first squeeze that it had, albeit much smaller. And I don't want to say, again, it's not going to the moon here. We're not shooting off like that. But if you look at the waves in terms of the way this sets up, it does give a lot more evidence to this idea that there's a September rally. We already knew that that was the 2-year cycle from that drop in. So this is the second part of that equation. Yes, September 8th, this is where I'm kind of getting to. I know it's like a long way of saying that, hey, IWM is actually setting up very much the same way as it did in 2020, albeit it's much smaller. So it's a very similar setup in terms of timing. It might be pretty one-to-one, albeit not one-to-one, but like proportionally the same. The ratio might be the same. It looks very similar. It's just smaller, more compressed, and doesn't go as high. But it is a very similar setup as the 2020 recovery, including the way it relates to the S&P 500, which could end up going quite significantly high, but it might take longer to get there. It might be going upward in a longer trend to its peak, maybe by around January or February or March, something like that, early in the year. Whereas I think small caps might front run it and just kind of chill out. And that's where it looks like the market's kind of setting up. To me, that's what it looks like. So when I look at this, I'm like, sure, this is possible, I suppose, if it has like a second move in November. Maybe, again, that's coinciding with like, I don't know, AMC earnings or something like that. And this could present itself as like a pretty huge move if that happens. The other possibility is that it just kind of pushes up to this top. And this is where you get to the September date again, because each of these waves has a reaction wave. Like there's a motion that happens here, right? And there's a big reaction upward. When you go back and you look at these, you can see that the place that they're coming back to every single time, without fail, at least presently, I mean, something could change in the future, but this whole motion right here, this is the pattern that I'm watching. This is why my chart looks like a hot mess, because it's like a bunch of descriptions of this pattern. This is the same exact pattern that was met here. And I actually went through and I looked at, and this is what I talked about in the previous stream, so I'm not going to go into as much detail, but I went and looked at this and I said, you know, it's the same setup. And when you look at where the middle is like after it drops through, and there's, again, I have different ways to measure it, but after it drops through the first big reaction off the bottom. And what I found is that on like the 4-hour and the daily, it's where the RSI is crossing up. So the actual the low point here on the selling is not actually where it crossed up. It crossed up before then. And we did the same thing here, where the low point on the selling is actually not the bottom. See, the bottom is actually higher. It created a divergence, both cases. The cross up on the selling happens here, like in January, for example. When you take that and you double that value, it's really where this is happening. This is kind of like the midpoint is what I'm trying to say. And you look at where that midpoint is, that ends up being, if you measure it correctly from where the drop in is, where it leaves that level, it ends up being essentially like exactly where, like right there is on the bottom of the RSI. It's exactly where this thing broke out. It's a 50-50 marker. 2 times is not enough. It's not a big enough sample group to say that it's going to do it every single time. It's just not. You know, 2 times is great. 2 times, 100% of the time is great, but it's not a big enough sample group to really say definitively it's definitely going to do this every single time. That's not accurate. That's not good statistics. But I would say that it probably makes sense because of what's happening here, which is that they're dropping through this level. And I think if you think about it in those terms, it does change the game a little bit, right? It kind of makes it seem a little more obvious as to what might be going on. And why this had such a huge reaction where it did. Why did it have such a huge reaction right here? Well, it had a huge reaction because of earnings, Booksy. I know, but I've seen this marker in the middle of the cat ears a lot. It's usually not the way this is shaped, but there's often like a middle bump. And I think it has to do quite simply with this, which is actually the lowest point right here. It dropped through the middle right in this section. So we're looking at this area from like February 2025 right through March 2025 right here. That's where it drops through that line again in the middle of the cat ears. And if you look at the RSI, there's a low point. The lowest point on the RSI is actually February 7th, which is this initial drop in right here. So again, is the marker there? Is it the lowest point on the RSI? Well, up until recently, yeah, it was. This one is lower. But again, we're looking at this as this is a pretty huge scale. We might need to even go to like, daily or something. But still, the question is, did it make a similar move? Did this have a massive dump in RSI that led to like a peak low right on the drop there? And the answer is yes, it did. Without a doubt, it did. It's there. And then it makes the higher lows on RSI all the way down into this bottom. And this is what's fascinating is this is the moment right here when the RSI broke out. That big pop that happened. Yeah, but there was also a creek jump. I know. But if you look carefully, that's also where the RSI broke out. And the RSI, again, even though this price comes low again, it comes all the way back down. You could say, well, it had to come back down because the creek was really tilted. I know. But the RSI never goes lower. It actually stays above that mark. It is consistent with what we saw in the previous two bigger iterations that we can look at with this. We can't look at what we don't have access to, is we just look at what we have. That is consistent with what you see on these markers right here, where even though this is kind of building out and down again, it never comes back below that mark. So after that initial move, right, it comes up above, it doesn't come back down. It's the same exact thing. It's happening in the same way on the same markers, I think, because it's the same, and I'm not going to go into like any more detail than that other than to say, yeah, that makes sense. And that makes sense as to why when it came back up, this is the anchor at which it hits, where it rejects off of, because it comes up, I thought, too high, and it hit the target. There was other wave targets here. Like we had drawn the wave target up to like 35 or 32 or something just from this. But that's the motion that you see here as well. It's the same exact motion, right? Happening in just a bigger scale. It's the rejection. It's trying to like build off of this and then reject. Why is this curve the way this is curved? I'm going to make an argument that it's actually because there's a bigger macro wave going on, in that in some regards, we might be even setting up, and this is kind of wishful thinking, so be careful with this. But in some regards, we might actually be setting up like an even bigger version of this. I don't want to get too into nitty gritty, but like where this is like a small version with an outcome. This is like the big version. Again, I don't want to get too into this. I haven't put a huge amount of thought into it yet, but like this could be a bigger version of the same thing, which would make sense to me because this whole area would be where you're buying in if you're going to bring it up. And so it would make sense that this micro would look a lot like a bigger version of it. If that's the case, there's more to it than this, but if that's the case, this could actually be the middle a bit higher. It'd be around, and I'm not, again, the white line I have right now is the best one, I think, for what we have. But on a bigger picture, it could actually be quite high. It could be up here instead, where this pink marker is. So anyways, we've got a middle. We've got a really good estimation of where that middle probably is. So there's only two relevant measures here. One is the last time it entered this zone and broke down, which was here. It's not surprisingly right where the Roaring Kitty stuff happened. It came back up and it chopped along that pocket, and it has the hook in the same place that this has the drop in here, off the same marker that has the drop in here, just like back here, the same drop in marker. And each time you're getting this drop in marker, you're starting to see like, all right, well, this is starting to build into the same pattern again, traversing along that major uptrend. That's one place that I would use a 50-50 measure. Okay, so that's one possibility, because that would be like a local one, because that's technically happening here. So I took that and I measured across to where that drop-in is, and the drop-in is right here on September 2nd. Now, well, that's not quite right? Because doesn't that mean that, are you trying to say that it's going to run ahead of time? I don't know. All I can tell you is that when you look at this from that point of view, if you use that deep motion right here, you can see that drop right there, and you go from where it left, that the 50-50 there on that wave, that's the essentially like the middle marker. I mean, you can kind of slice it and dice it and make it slightly different based on which candle you're using. But it's essentially like where this meets the breakout. It could be that, again, that's the middle marker for that reason. So you have a very strong chance, if I'm just going to say it outright, there's a really strong chance if that's the middle marker that this is basically done on September 3rd. And that's a big deal. That means that Monday, Tuesday, next week even, this could already be going. Well, what about these lows? It's not down there. So how's it going to get down there? Well, this is where you lean into a bigger understanding, because while that's true that that was indeed where the low is, you could go back and argue, and I tried it with myself. I argued myself, right? You could go back and argue that the middle depends on really your perspective of, because like, for example, let me just show you what I mean. So like right here, if you use the actual red candle, then look at where this is. This is actually like the breakout point. That's pretty great. Wouldn't it be great to know exactly where it's going to go? That'd be amazing, right? That would be essentially like our September 3rd moment right there, if that's true. We don't know if it is, but if that's true, and that's the red candle right there is the middle, the absolute middle, then that's where it should break out and go. When you do like a broader measure and you just look at like when did it come back up and exit that level specifically, like when did it get back to this level? Because let's say you're like, well, that's a bit wishy-washy, hopeful thinking. This doesn't really mean a whole lot of anything. I mean, you can see it kind of comes back up and retests it. And ultimately, this is where it crossed. You could say it crossed up on the RSI. Like, there's a number of things you could say. It's the first of many creek jumps here. There's a bigger one. So maybe that's it. I'm saying maybe a lot because I don't really know. This is why I'm saying, like, yeah, I don't know if it really matters that much to be that precise. And even if I got it perfectly right, like, who cares, you know? Because you're going to watch the price action anyways. But it is noteworthy because, like, I mean, that is not the bottom candle. So that's tricky. That's not the high selling candle. It's like the reaction. And it's kind of in the middle there where it jumped over this creek. I don't know a better way to define it. So there's not really an easy answer there. So one of the possibilities certainly was September 3rd. But that could be more of like it's exiting there. If that were the case, this is what I would imagine, okay? I'm just going to throw it out there. Maybe you get a nasty sell down right here. Maybe it starts trying to go down Thursday, Friday. We don't know if it gets there or not. But then Monday, Tuesday, or it opens low or something like that, okay? Monday, Tuesday, you'd probably have a big breakout. And then the 3rd, which is Tuesday or Wednesday, excuse me, that would be like where you'd have this kind of a backup, right? That's really fast, but it does make sense. This is so freaking compressed right now, I can't even tell you. And it is already testing. This is the yellow line that it tested last time. It's already on it. Technically, it's already doing a strength test on this parallel. It's below it right now. Like, it dropped beneath it. So if it did have a rejection here and dump, this would maybe be the dump moment. But yeah, this would suggest that when you come up, you'd be back down, you'd be buying in essentially off the creek here on the 3rd. So to have a major double swing moment. This is not the actual earnings date. The actual earnings date is on the 8th, which I've marked off here. Well, that doesn't really help, does it? Well, it kind of does, because if that's the case, then it's easier to imagine like earnings is either this motion here or it's already going, right? It's already squeezing up into earnings. And earnings at that point would make sense to be higher up in like a breakout zone. This is where things, again, I don't want to get like overcomplicated, even though I'm already doing that. I think this is where you have to then look at, well, what is this, right? This is where it comes back to the top here. So locally, that's not exactly the same as saying it needs to come all the way back up at that particular moment, all the way up to $59. Really, it's like, no, if we're using this wave, it's where it comes back to this marker, which is 2773. And that's kind of interesting because 2773, to me, I don't know if it's a fib level retrace or something here. It might be like a bearish retracement. I wouldn't have looked at this and said that's necessarily the top. But I do think that it's an interesting place because when you do an outermost creek here, I've got a little red line. It does intersect with where that is. So even though it's not like a very, in my opinion, it doesn't seem like that's the top, it is a very interesting place to be come September 8th. So if it comes back around and it's at that motion, again, I mean, this is a big what if, right? Because again, I'd have to measure it through and see where it is. And again, we were talking about two different measurements here. One being the September 3rd, which would be like the red candle measure. The other being the reaction measure. The reaction could only be, in my opinion, described as, I guess, like either this one on the 11th or this one on the 14th. There's a big candle on the 14th, which is Valentine's Day this past year on the 2025. That's kind of my best guess because I think that one's more significant, but I mean, you can decide. So that would be the second one that you could measure a double value. That's the 16th. That's really close to rate cut dates. So it would make sense to me if this is going to mark up that by the 16th, it's really ready to go, or the 17th. That makes perfect sense. So what that would mean is that it doesn't need to come beyond that particular level right here around 28 until like the 17th. So again, I'm just imagining what this is going to look like. I don't know for a fact that it's going to do exactly this. All right. But basically Monday, you'd have rate cuts coming, right? If that happens, then it sends it on Wednesday. That's actually pretty darn accurate. That would look really, really close to the 50-50 here, as I would see it. So this is a way that I could imagine on GME starting that move up. So actually already being elevated and kind of in a sell-off, but an SOS kind of a period right here. That is indeed, you guys are probably looking over here like, that's where the gap is, Booksy. I know, that's where the drop ledge is. I'm telling you guys, like, it's set up really nice. These are big macro measures that are kind of giving us that window. It's where the creek is too, isn't it? Yeah, it is. What if they announce something crappy like they announce again that they're going to dilute or something? I don't know. I have no idea. Maybe that happens, and if it does, we can look at something like this, But until that happens, it's kind of like, sure, this could be something crappy where there's like a kind of a fake out, and then they announce like a dilution, and this drops back down. I get it. I'm with you on it. I understand why that could happen. I don't think it's out of the realm of possibility. It's definitely a possibility. But on the whole, I'm kind of looking at this thinking, it really, to me, this makes perfect sense. And then this is really your bleed moment where it just kind of goes. Not bleed, but melts up. And again, you might be saying, well, where does it go? This is what's amazing, is that if you look at this as if it's going to run into the end of September, and you look at where this is that same region on those parallels. Like, it's the same level, right? That's the same marker right there that we've been coming back to time and time again during these breakouts. And what's even more amazing, I suppose, in all of that, right, is that when you go back and you do certain bigger measurements here, you find that that wave actually should be meeting up somewhere in this region. That's why I have so many markers over here, because there's a few different measurements, but it should be measuring out somewhere to near October. That's kind of like where I left it, and I haven't really done a lot more with it, but like that's in the right spot is what I'm trying to say. So when I looked at that, I was like, yeah, that makes sense, because this is going to go back up, retest the top here. Where is that on the big picture? Get this. This is actually, if you look at where that is right there, that setup right there, if it were to manage to get up to $65, some people are going to be like, that's not enough, man. I want to go farther. I mean, it's great that all this stuff is like kind of waving out there and triangulating. It's cool, but I don't really care about that. I just want it to go farther, farther, farther. Remember, like, where this is. This is on top of the bigger creek now. Why does that matter? Because you literally just saw this happen on the smaller version of the same thing. What? Yeah. What this would entail actually makes perfect sense, because if you look at this as an iterative motion, then the next action should be a backup, and this could be a nasty backup, right? But the next action should be this backup right here, essentially. It could be that it just chops, right? It could be that it just chops and goes. But I think that when you look at this as a 1-2 cat ear, and then you start looking at this as a bigger picture motion, again, macro motion, this makes sense as like a second ear out, and then all you're really missing is this motion right here. Does that mean it's going to come crashing way back down? I have no idea. I don't think that's what it means, but I think that it would be very reasonable to expect that this would come back down to near like 32 area, again, where that top was here. It would look like a mini version of this to some degree, like another version of this, but on the big picture, it would actually look like a bigger ear, essentially. And it's already pushed the creek. So it's like it's done a push. And then when you break again, like let's say in December, the creek's already been pushed. So this alternative version may seem a little bit different. I have it going over here in a weird way. It's actually much the same. It's much the same. And it's just a smaller version of like the same things. This could get you up and launch you up to like 85 November, December. And that makes perfect sense because of where that would be going. And 85 was the Bolkowski target on the wedge. It never hit that in regular trading hours, but it would finally hit it here down the road, right? It could finally come back up and hit 85 in or near January, and then we'll see, right? Then there's a whole lot of questions about what happens next. I think potentially what we see something similar to what happened here, but on a bigger scale. Because my thought is that at this point, if this wave continues to do what I think it's doing, you might actually just get like a really long form kind of a squeeze motion here. And you basically would just like keep doing the same thing, like iterate. And we've talked about this before. I did a chart like this a while back. But this might be where that finally like comes to fruition, where you're iterating over the top and then you squeeze here. Does it have to just stop right there? Why couldn't it go farther? It might go farther because this is, again, you have to like zoom out and think about this as like a big picture version of the same things. If this is a wave right here that eventually breaks out above it, couldn't that be also said, like this guy right here, couldn't that also be said about this markdown? Yeah. The fact that this then has a spring motion low, look at this, what I'm trying to say here. This is anchoring low, yes. But notice that there's a bigger possible cat here. Like, it's this guy right here. I've got it pretty high up. It may not be that high. I've got it off the middle here. You could also put it like right there. Either one is fine. I think both might actually be maybe warranting a line on the chart. That makes sense. So couldn't that be, if it could be a termination point, that's like 200. Yeah, you could look at that and say, it's not going to go beyond there. Well, that's probably more realistic. And again, I did a wave, and this is the wave, and it's actually following it really nicely right now, and that goes all the way up to that intersection right there, like 229, about June 2026. So this would be like a long form iteration where it's kind of doing this chopping business and pushing up. This is where things, again, they get kind of controversial, because you could say that it should go all the way up, but this is where we get to like the buy button removal conversation, because if you look back at this marker, and you see that walk down right here, you can see the similar movement in terms of like traversing right here, right? That this was like a sort of a halfway point. Just like we're talking about in this zone, which is September 2022 to November 2022, you probably could have looked at this and suggested that it really wasn't meant to go that high. And it would have done well, or just as well, to have stayed like right here. That actually is pretty much the exact same thing I'm saying right now, because if you go back and you look at where that is, it's above the top. You know, it would have been a higher high for sure. You can see it. I'm not just saying it, I'm showing you as well. Like you can see it would have probably come up to the top and then gone a little beyond it, but it would not have been this high, right? But what we do see is that there's like a 50-50 wrap that happens here, and it propels it over 50% above the top from that middle. So if we're looking at the same exact setup, it's not identical because they're not obviously in the same spot, but like if that's the middle right here and it ends up being that there's a 50-50 instead, this may be like a very conservative way of understanding. And I can't believe I'm saying that because it feels like that's not conservative to me. 200 something by June is not conservative. But it does seem like, you know, hey, if that were to manage to hold that mid-level, I think you can make an argument that this is going to do like a 50-50 from white to white up. It's a bit of a huge equation, but notice where it is. And I did do this before. I checked this out. Notice where that is. If you look at the 50% up marker and you think about that as like a squeeze move, like, oh, it's going to just go boom and then come back down and then kind of settle here. Check out the level that comes back to right here. And this is that trend. I've said this before. It doesn't seem to ever fulfill because these are so massive. But these cat ear markers on the bottom often do point to the next top. When they're on the bottom of the cat ears and they're kind of at an angle, I use them all the time. That would be a bit crazy, but that's 775. I mean, that's insane. I know. What other reason would we have to do that? I don't really have another good reason. Sorry. Outside of a squeeze and just the fact that it's there as a technical trade, I think it could be some kind of a trend from like back here up, but I don't even have it on the chart. So I'm not going to deal with that right now. But yeah, I mean, is that a little bit crazy? Sure. It is. But I do think it's a possibility. I mean, if this were any other chart and I looked at this wave, I didn't have numbers attached to it. Like I wasn't thinking of this as GME and this was not hundreds and hundreds of dollars, right? This was only like a couple bucks up to like $10. I don't think I would really question that because it does look right. It's essentially like launching you up, basically like over the top here so that then you could do the same thing again coming back down. And it's essentially just building out a long form trading channel. Like this wouldn't look that weird if we weren't talking about $800. It just wouldn't. It would not look that weird. It would be like, okay. Because it's that high, I'm inclined to think that the real goal here isn't necessarily to take it up there. That's like a markup. It could be, but I think that's, again, so I'm not going to take it away, but I'm just saying I would be inclined to think that it's probable that this is going to go over the top here. And that really is the goal, is just to kind of distribute back over the previous all-time highs now that the chart's been kind of changed due to the split and other things, and they've got all the valuation changes. Sure. Then we could talk about a longer form walk down that goes back to this yellow mark, potentially even lower, but that would bring you back down to like, and I don't know why I have this at the angle that I have it. I don't really know if I have a good reason for that. This would be like a 2027, 2028 walk down to come back to like 50, maybe even as low as like 30s. Well, it shouldn't do that. Well, yeah, it kind of should. I mean, if you think about this as a big move, an M1, 2, 1 being the first push here in May, 2 being a really big push starting now in September that ends maybe 6 months from now with some breaks in the middle. 6 to 7 months, excuse me, more like 8 months, I'm sorry. Then, yeah, I mean, it kind of makes sense, 1, 2, and then come back down to check the creek again. It wouldn't be like a hugely controversial thing to say. If you look at that as just like a singular motion, right? I don't think it would be very difficult to imagine that. So I know that these numbers are ridiculous and they're crazy, but the fact that they show September 8th, to me, I'm like, yeah, that's pretty important. Right. So if somebody showed you this and you saw that, and let's say it doesn't go significantly lower than that, that's kind of where it stays. So let me just kind of break it down into like the simplest wave cross that I can, okay? If you saw it go up here and go up to the number that I'm saying it might hit, which is very high, right? So even like this one, I'm like, yeah, that's just a walkout. It's like a big M cross, basically. Like, you think it's going to eventually come up here. How does it get there? It would not be unreasonable to say that this probably comes back down, especially if you're working on the premise that, yeah, there's actually quite a bit of continuity there going back in time with an uptrend. There. I think this would be fairly stomachable. I think you'd be able to pretty easily suggest that that's likely going to happen. And it's not, again, I don't really think it's even that controversial. It's kind of like straightforward technical stuff. So it's interesting, like how, yeah, I go really nitty gritty on all this stuff. It can get a bit too heady. But if you think about this as just like a wave cross where it's like pushing up and then it needs to find like support over top, and that's like your M cross, the rest of this kind of just falls into place. Which it should. Like, this is basically just the same thing we did over here. Even like in some ways, probably a similar level. I don't want to say it's going to be 1-to-1, but it might be pretty darn similar. That's the same range right there. So it wouldn't be that weird. I think it'd be pretty straightforward, actually. The way I have this drawn out doesn't look quite right, but we could do a little bit better job at that, I guess. Yeah, something like that. So if we saw something like that, I think we would be pretty comfortable saying that that's likely. Now, I don't know about going as high as I was saying, because that's really far. But the rest of it is basically like a double and up kind of motion. It's starting to look like all neon colored. It's kind of cool. Yeah, that's like a halfway point. If you take that as a, let's do this. Let's make this one different. And then let's do another one here. This kind of goes back to like an original, early idea that I had, that this was like a middle right there. Yeah, that tracks. Yeah, it's pretty straightforward, actually. It's just, again, it's not like, yeah, I've got all these like fancy pants measurements and stuff, but I'm really just measuring like this wave right here. And I'm saying that sincerely. I think that this wave does exist, because when you look at this, and you look at this, especially like after you draw it and then you come in and you look at it and you're like, is this a wave? Are we actually following this? And you come back and you look at this, you're like, yeah, we are. We don't know if it's going to keep following it, but there's really there's a lot going on right there with this interaction to come back to this mark on this drop down. I find it to be extremely compelling, this motion right here. Like, this is a well-defined arc. So again, I'm not saying like I necessarily have the top targets perfect or this or that, but maybe it only comes up to like 190 or 200 or something. But like, this to me makes perfect sense. And what's kind of crazy is that you could then take this out, and I don't want to take it out of context, but you could then take this out and say, well, if it does have some kind of a spring motion, maybe this takes longer. That's possible, but it's not going to likely take beyond the end of the year to get back up here because there's not that much time. You really only have a few catalysts anyways. And even if this were to drop down, doing like a spring-like motion or a liquidity test here, it's kind of bonkers to me that this is then back to this level. Like, it's just a strength test. Sure, it could do it. Maybe it just drop right to there, you know. This is kind of what I've been trying to do all day, is like simplify this. So even if it did have like a nasty spill down, it's like, yeah, well, there it is, you know. There's your S-curve right there. And that just leads to the question of like, should it go farther? I don't know. But if it did go farther, I think we have a good, reasonable kind of extension there. It's kind of crazy high, but it is reasonable for certain reasons. I think this to me looks right, and I think the S-curve here looks right. I don't have, again, the perfect kind of, oh wow, look at that. And it is it's like a perfect 50-50 over that 80 or that 65 level. Jeez. It's perfect. Look at that. Holy cow. Right where we are right now. Of course it is. I don't know if we need the drop. Any kind of a drop here would probably be an extension over this top. Like, it'll be extra credit. Because that's really dang close, guys, to that May target. That is right on the dot. Holy cow. I'm genuinely surprised how perfect that is. I really am. Like, I knew 65 was likely the marker for a number of reasons, not just because of the previous top, although that definitely gives it a huge bonus right here. But we also had like a local 65 target here, because there's a second target. And as things get a little bit dicey as we go along, I suppose, if you keep doing this forever and ever. But there was a second target like right here. And this is the one I was just talking about, where I was like saying you could do the measures and get September 3rd and September like 16th or something. There's a second target like right there. So there's like an idea that you hit that once short term, potentially, right? We don't know for sure that this is going to happen, but then it goes into like a sideways period and then breaks out again, probably going into the new year. And then you have a squeeze motion that could last for quite a while. It sort of just depends. The secondary action right here, this like November pump, is where AMC kind of peaks out. You might be saying at that point, like, why would AMC stop then? Because that doesn't make any sense. Why would it stop going? If GME is going up, why wouldn't AMC go up? Well, remember, AMC doesn't move here until January, like way back here. Like, this is January 15th. AMC is actually down until this point. So we're in a different time in the chart, perhaps. We don't need to think it's one-to-one. But if you look at that and consider that, then that could mean that, I mean, I'm not saying that I think AMC is going to go down and stay down into a long-term spring bottom, although I guess it could. It would be really crappy for us. I don't think that's as likely, because I think there's a build-out. What I think that means is actually quite straightforward, which is that, yeah, there could be a double upside move here, and we don't know exactly what this is going to look like either. We're kind of assuming it's going to be an S-curve, but we don't know. I had drawn out something like this before, so I was thinking about this creek coming back pretty low and then breaking out later, like that also made sense to me, around December or something like that. So who knows? We don't know for sure. All we know is this is probably chop or chop back down if it hits that mark. It makes sense to me, but whatever. So we could say like, well, why would AMC not go? If it's ready to go now, it should be heading up with it. Well, again, it'd be like saying that this doesn't go until maybe April or May if it takes a really long time to walk out. Let's just say it's slower. Doesn't have to look the same. It's still an S curve. If this takes a little bit longer and it ends up with some kind of like a strength test off of 65, that's also like just a basic S curve cross right here, where they both have a 50% run. They go from bottom to 65, 65 to top. You may not see AMC die like over the next year. Maybe there is another move, right, that happens in May of next year. But the critical thing here would be that like this is ultimately like a takeoff zone. So there's not really like a one size fits all in regards to what should happen here versus AMC. I think I haven't even really thought about something like a May move for next year for AMC. I really have just thought about the like the shorter term kind of setup and what I think is very likely. But I guess if we looked at a May move, I mean, it wouldn't be a big deal. I don't know what it would look like, but this is April, May right here. Yeah, I mean, it could just represent like a backup, at least the way I'm doing it. And then who knows? Maybe it goes. Maybe it holds right here. It's a backup that roughly correlates with the $7 mark, which makes sense because it would be like where you'd have this come back and retest. I'm not sure about that one. All I would say is the last time that happened, it went to that same area, it failed, so it did a distribution. So it kind of reminds me of that March area, and that's a tricky place to kind of hang your hat since it didn't actually break out here, but it is a big move. So you're saying it's not going to go. Well, I actually don't think so. I think if it made it up to 1960 and it does distribute and it does come down the first 6 months of the year, whatever, 5 months of the year, it has like a big retracement. I don't think it'd be unrealistic to say that could be it, in terms of a walk up. We'd have to come back and look at it later and see what we could see because I don't know about all the markings here yet. It's also possible that this doesn't ever go back above there. I mean, a run up in this particular case could be coming back up to retest a level like this, which could then turn into a gigantic like head and shoulder, right? So we really don't know what that looks like in May. If it did break out, then yeah, I think you would expect to see a squeeze up to finally back up to that 50, 60 area. That would sort of follow through on like a bigger motion, but I'm not really at a place where I'm like comfortable saying that that's likely going to happen. So I don't want to keep going on that for now, but it is a thought. I mean, maybe there's something to it. Maybe there's a May move, another move. It's like pretty soon after. This is like the first markup move. And there's actually a bigger one. That does give people ammunition to suggest that you're right, but you're also wrong, Booksy, because you could tell me then that really all I'm seeing then is a really fast September move that builds out into like a November move. And this is micro, it's shorter term. But then ultimately that builds into a more healthy January kind of move right here. How would that work out? Like, I don't know. But maybe that's the argument somebody could make against me is say like, well, you're really just saying this is what's going to happen. But this is a slower walkout. Yeah, that's possible. I would believe it if I saw that build out become bullish, you know? And it does seem like when you look back in time at this kind of stuff, it often to me has seemed like this move is almost unnecessary. Like I know it goes above the top. I get that. But we don't usually see it do this, and I think GME was the same way. I mean, in a normal circumstance, I think this could have been like this. Because this just needed to go over the top here. It needed to go over this like phase B top. Didn't need to go way over here. There was no reason for that. So like if we had seen this in slow motion, we probably would have seen something like this, where it popped a little bit higher, came back down, and then this is the reaccumulation. It's not really any different. Just doesn't have this massive sell down. So I mean, it's not completely and totally unreasonable to say that what I'm seeing now, what I'm kind of illustrating now, might be more like that. Just a concept of like, well, we're really just seeing like a double walk up in a more healthy way. Maybe we hit 7 and then come back to 4, you know, and then we build out again. That's a way to look at it too. I think that could be reasonable. Just a really straightforward way of kind of saying the same thing, but let me make this one a different color. I don't want to say they're all the exact same. It makes it sound like I'm just spinning tires here, but they're not all exactly the same. But like that would be a reasonable expectation, I think. If you were looking at this suggesting like, I don't get Booksy, why do you think it's not going to go up to 40? Shouldn't it go up to 40? Maybe the idea here is that this isn't really a good model for understanding because it doesn't actually show you what a normal walk up would probably look like. You just need SOS with a backup and then it advances and builds over the top. I mean, that's pretty straightforward, and that's a reaccumulation. It pushes. So that would follow this model pretty well, you know. The only thing I would say about that would be kind of concerning is that this may not even go up. If that's the case, this may not even go up to, I don't want to be like a bearer of bad news here, but if this only hits 7, it kind of leads to the question of like, maybe this doesn't even go up to 20, you know? And that would be a way to kind of keep people on the hook too. It really would only need to go up to like this top right here in November at 12. Darn it, I don't like getting like new ideas that make sense. It actually kind of makes sense. Because this makes sense because if you look at it this way, then that is the top. That's the same area. So the first move is just to get you back above here. And that really doesn't need to go that far. You go to like $7, $7. And then the second move, you can just back up to 4. And then the second move is a 50-50. And that also doesn't need to go really high. It just needs to get you up above the top here. And then you can just have like a new accumulation, just like they did here, reaccumulation off the top. Ugh. And then you have a potential, darn it. You guys are like, why are you so angry, Booksy? I guess I don't really like when these kinds of things make too much sense because like, now it kind of leads into a second squeeze that I didn't really want to have to deal with because this would like not be very high. It's not bad. It's still like way up here by December. I mean, if you got calls for December, it'd be fine. It's just a different way of understanding a move going into like May or something. It had to be slow. That's a bit confusing. This was not slow. Are you really gonna do this to yourself? Yeah. I guess I have no choice. It's always a choice, Booksy. You just turn it off, go back to day trading. Well, yeah, so I guess what I'm saying is like, it does seem like this is a possibility because if this is just part one, it could just take a lot longer. And what we're thinking is wrong here might actually be right. It's just longer. It's like spread out. Yeah, and even this could have like a serious spring here and then build out here and go again. That's how you could have your May move. I wonder where this goes like by then. It's not quite that high, but it probably would come back. I don't know if it hit that gap. It'd probably come back to here and retest the floor, which does make sense. Darn. Well, there's a possibility, man. I never really thought about that. That this like walks out more gradually with like a November move. And then, yeah, that actually makes some sense. Well, there's more opportunities, I suppose, to see some good price action if that happens. So kind of works. So this is like a slow-mo version of January. Well, that's kind of stinky, but I guess it is what it is. I'm not going to sit on that too much longer. I need to do other things. So yeah, I'm looking at Tesla looking kind of red today. It's a bummer it came back down, but I'm not really that surprised. I had a idea that this might come back to this top here. It did it in extended trading hours. It went all the way back down to like 350. This goes to like 349.10. And then I was talking earlier about how it looked like it was starting to do that kitty catty or kind of thing. And it looks kind of crappy. So none of these worked out. It's kind of a bummer. But I was also not really watching it, which is my bad. This one is still, I think, at play. I wouldn't get rid of that. This is going to be impactful in the future if it goes back up again, this guy. So this is the first reaction, 1, 2, and then it comes down low. So it actually does make higher highs again, and then it comes down again. We'll see. And then there's a good chance if it can hold here and break. And it looks like it's just kind of created a new, it just created like a new resistance, that's all. Yeah, why was I thinking it would come back to that level? Can't really see it on the chart. It's really bright. This was earlier. I thought there's two ways it could go. It could either pop here, in which case I thought it would hit the high. I actually thought it was going to come back to just 350, which it kind of did this morning. And then I thought it would go again and come up above. And it didn't do that. So it hasn't gone yet. It slowed down a lot. Instead, it's actually it crossed down instead of crossing up, which is kind of a bummer. So that was a cross down. So that would have been an opportunity to get out. Made a lower low. This is pretty similar to what we saw here, though, because it has this early reaction, and then it crossed down and made a lower low. And then it just depends on what happens next. I'm not saying it's 1-to-1. It's not. But it's a possibility that we're kind of doing a similar walk down here. Let's see what happens. This guy has been a really good money maker for me, but Tesla is a extremely challenging stock because pretty much after it has like a big move, it's just not a great, there's not a lot of great follow through immediately. Like it day over day, week over week looks awesome. But if you look at like a 1 minute to 3 minute to 6 minute chart, you can have some pretty seriously volatile price action. Like this didn't quite get to where I wanted it to go. For example, that kind of bugs me. 356 got really close, got 355. But like as it goes, it tends to be pretty choppy. I still think this is probably an S curve. So unless this is going to completely and totally just crap out here, it should find support somewhere nearby. So really just looking at where would it be, and that could be quite low. That comes down really far. I already made that advancement, so I don't think that there's a yeah, you're right, cannon fodder. That's exactly right. So they bore you so you don't pay attention to it. That's pretty standard stuff. And then pretty much at that very moment is when you get the bigger moves. And then once people come in late, that's when they're already selling. They start the markup and it gets some serious traction and momentum because smart money will buy in early and there'll be huge volume, huge moves. But before you get to the top of that move, they're selling. They need people to come in and buy so they can sell. Everything is like a wave that where you're like riding in front of it or behind it, right? So your market makers, if you want to call them that, or your, which I don't think is a particularly accurate way to describe it, but the operator is a better way to describe it. That's pretty much their game plan. It's never that interesting. It's not really that interesting when you think about it. It's kind of straightforward. Like, I want to be able to sell all these shares that I got. I need to have millions and millions and millions of people buying it. If I bought millions of shares, otherwise it's going to tank the price. So I want it to keep going up while I'm getting out. They're not going to make it. They're not going to foot the bill. They got to get retail to foot the bill. I'm genuinely like, I know you, like we talked about this for a good hour and a half or so, maybe two. I'm done with talking about GameStop and AMC in general. The next time I have a conversation about this, I might do a short video, but I'm not positive I will. I'm probably going to be when we're running. And what you guys are going to find is that there's like 30 to 40 people in here when I'm streaming stuff. But what always happens without fail is there's like hundreds of people. We'll get like 200 to 300 people or something ridiculous when it's running hard because people want to know, is this it, kind of thing. And the truth is that it probably will be like a big deal, but at the same time, it's one of those things where like, I'm not saying that everybody that comes in that's not in this 40 to 50 group is behind. But there's certainly an element of that where like some people are really behind and they're pissed off because they're like, oh, I want to get in and now I can't, where should I get in? Where should I get in? And I'm like, should have gotten in down here when it wasn't doing anything, right? When the stock looked like it wasn't going to go anywhere, but you've got technical setups that are just really nice, like really nice technical setups that are really strong with a high probability, and you've got the stuff coming down the pipe, like, yeah, there's an element of trust. You have to like trust your own work here, which makes it feel risky. But like, that's the very nature of the market, like you don't want to be buying when it's running up 150%, 300%, 400%, and it's about to go sideways and destroy your options for a month, when it's up here. And it can be like that fast. We saw that last time. It went up in like a 2-day period. So I can't tell people to buy or sell anything. I can't do that. That's not legal. It's not ethically right. I think it's stupid to even say that. But what I can say is that, like, for myself, I'm like, I do not care if it drops to 18 or 17 at this point. I just don't care. Like, it really would not faze me to see it drop to 18. If it happens, it happens. It's a 50-50 down. I genuinely think it's a buying opportunity because I don't see this as bearish. I don't. if it only drops to 21 something and it comes off this and it bleeds a little bit and then it pops and it's back above here, on September 3rd, it's the same deal, right? Like this all looks like it's going on forever, by the way, because I did this on like a macro. So it looks like it's taken a really long time, but it'd probably be around the 16th or something like that this would go. Okay. We did the measurements earlier and we found that there was one date like right before, it was like Tuesday the 16th was a likely date that we'd probably be here up at $30, like not quite 30. Like really it was like, I have to go back and like find it again. I think it was like this value or something like that. Right around here, right? That's probably where we're going to end up on the 16th or so, right? But like between now and then, you could have a spring. Like it could dip below the bottom. The bottom on a phase B should be looked at as this reaction down for the most part. This could be thought of as an auto reaction and a phase B top. That's possible. Or you could think about it as like a reaction. I don't really care, right? We know where the resistances and supports are. We know that there's multiple supports on the way down. One is like 2140, one is like 2076. And then, yeah, like it goes pretty low if you use that parallel structure. But like all of those are fine. Like who cares? You get in early and you get slammed. Okay, that's a choice. You have to recognize that like you could get in and it could dump. You could lose a huge amount of value. Maybe that's an opportunity, If you choose to trade it, you might want to decide if you're going to average down. I don't know. It's 100% your choice, your point of view. But if this ends up breaking out and going and it's ready to go on like the 3rd and it's going into, earnings, which is going to be on I think the 8th, right, is what it was. That to me is like, all right. You're really not that far in advance. All these things are fairly straightforward, I feel. So I don't find it to be, like what I'm trying to say is like, and I'm trying to say it with too many words, I guess. I need to use less words. And to me, this looks like it could be the same thing. You've got like an auto reaction and a phase B top. This is like your bottom, then you don't really need to dump like significantly below it. It might just go right here, is what I'm trying to say. I don't find it to be very complicated. When people say like, well, where should I buy? I'm like, I can't tell you. I'm looking for a good buy zone for AMC. I had a guy come in like a couple weeks ago, just looking for a good time to buy AMC. I'm like, when do you think is going to be a good time to buy it? Like we're basically at all-time lows. And if this does happen, we're not coming back. We may come back later over here. I don't want to get into that, but like, at least for now, if you're expecting anything, it's at a squeeze point, You're about to either make a huge drop and rip or just rip. Why can't we just make a drop and go to 0? Then I'm screwed. Yeah, you could say the same about any stock in the market, it's always the risk. Do you believe in it or not? You know what I mean? I can't tell you what to say. So yeah, this could obviously drop and come low. I wouldn't be worried about that part. I just wouldn't. I don't see it as a problem. Some people see it as a problem. But, these are the times to think about entry. The other time to think about entry is on confirmation. When it breaks above here, comes above 320 again right here. It's confirmation. It's probably going to be really similar to this level. That's the way it's setting up. That's going to be a confirmation zone. It gets above that 320 area. You should have a good push from there. Should go pretty far. So, we can like be all about trying to make everything perfect, and it'd be great if I could get it right every time. Or we can just kind of say, this is really the best time. And if you're going to wait until it's up 100%, that's okay. You can do that. But when that price is up 100%, those calls are going to be up 500% or whatever. It's going to be expensive. You're going to get stuck. You're going to get a lot of people stuck in trades. It's not when you want to be. And I hate to say that we should be trading alongside smart money. It sounds like antithesis to all of this, but what retail started here, like institutions are finishing, in my opinion. What retail started has given us an avenue for institutions to come in and take hold. People don't want to hear that. I get it. They think that shorts still haven't covered, which I think is baloney. I think that they've covered more than a couple times. And I think that they don't, even if they didn't cover, if they just shorted again at the top, they would be fine. They have all their positions would be taken care of. GameStop's a little different than AMC, but AMC, come on. There ain't no shorts except for shorts that are in it for this past year. No shorts from 2020. That's not a thing. We already know that too. They already said they got out. Like they did data analytics on it. The ones that didn't get out got burned and shut down. I mean, that happened. Anyways, Target's looking good. I haven't looked at Target for a minute. Yeah, it's okay. It's kind of meandering. I'm not sure what I wanted to see, but I guess this looks good. I like the RSI bounce and the higher low here. That looks nice. I mean, frankly, I don't know why I'm complaining. It's basically right in the pocket that I wanted it to be in. So I had this blue box here for a backup. I don't know. I guess I'm just wary of it because it's going kind of slow. I'm just still not sure about this. There is potential here that this has like a sort of a hook area and then drops again. I'm really not trying to be like a naysayer, and I understand like it could just not do it, which would be nice. But it wouldn't surprise me. Since this is like a bottom, it would not surprise me if it came back and just hit it before it took off. So we'll see. Right now, it looks like it got over that tiny little creek. I don't know why they need more money. It's kind of pointless. Maybe that's their idea of like helping out retail. It's like, I'll just keep giving you ammunition to say shorts should get out. Yeah, okay. I mean, I don't really know what I'm complaining about here. Everything looks fine. I'm just nervous. I'm hesitant because I think that if I were trying to bring it down, I would probably have this back up again and get people to buy in again. It's already at the 50% retracement right here, which is at 97. So it needs to pass. I mean, frankly, we were talking about this earlier. It really needs to get back up over the top. Like we need to see this motion here. And that's a big motion. So if it makes that push, I'd be a little more comfortable to say it's probably going. But right now it seems a little slow to adopt it. And I'm a little bit nervous again that we're really just forming like a kind of like a micro top here. So we won't know until it gets up to there. But I would imagine that you could stop from anywhere from like the 0.5 to the 618 on a bearish standpoint and probably see that as like an extension down. So let me see what that extension is down. I'm in target. I'm not anti-target. I'm in it. I'm in the play. I'm just trying to be careful about it. But yeah, the 0.5 is here. You can see that a 618 extension is quite low. The 618, which I think was like right there, it's kind of inverted. It's not that high. It's near this top, which makes sense. It's often the case. They marked it off on the way down right here at this top. So this is pretty close. So if it hits like around this area and it failed, yeah, the 172 is enough. That's a spring. So 172 would be enough, and then 1414. And then I don't know if you would need to do a 1618. It's kind of far, but And it's probably an even bigger one if you do it this way, but I don't want to do that. That also would beg the question, like, well, what about the bigger retracement? Maybe it didn't even go back that high. I'm aware, but a lot of times what you do is you come up in a phase B, you'll make the bottom, you'll come up, and then you'll do the strength test. And I think that this is where the strength test is kind of decided, is if it holds and like pushes out above something like this. So if it tries to go down and there's just not enough sellers and they can't sell it down, for example, you should have a big strong reaction that then just starts taking it back up and really starts pushing the boundaries, especially right here. You can see that trend long term is pretty important. It comes all the way back to sort of this original downtrend here. So that'd be like re-entering that, I don't say that range, but like re-entering that trend is a big deal. It's like a widening on the top. So right now, that's probably going to be, again, a high spot of rejection. We already rejected on it earlier today. So this is a good entry point if you're interested in the play, because if it came above here and makes a higher high and then finds support, I think that there's a decent chance it's going to break out and go ahead and head to the next one, which I've got here, which is the next parallel up. That would be this zone, and everything's looking a little long-winded now, but that'd be this next zone right up around the gap fill, which is at 99, which is right there, up to potentially as high as that. Now that still could be part of a phase B because it's not coming over the top. It's like retesting the auto reaction top. And that's also a place you could see a phase B drop potentially. So this could turn into kind of a long-winded bunch of nonsense. The good news about that is that you'd have a bigger retracement here. I think you could use a fib extension. You could use a bigger one. That would be a really slow, boring way to kind of travel across this and avoid having to do anything this week. This would lead you into Tuesday. You could even drop it on Friday into a spring. There's a bit of a trend here coming down. So that goes way back, and that's an important one on the macro. That's probably the most important one that I have on the chart. This little guy. It goes all the way back to like a pretty major creek cross for target right here. So all of this is like really micro stuff that we're talking about. The crazy thing is that like we're really not looking for huge moves. We're just looking to get back to 105, which is really nothing in the grand scheme of this. This thing has miles and miles it could go, but is it a bullish or bearish trade? Right now it's in a downtrend. It's really just trading reactions. Even though it got way oversold and all this other jazz, it'd have to sort of prove itself that this is going to bounce, and then would basically you'd need to see it take off above 110 in order for this to then be like a bigger trade. It's possible. There's an M here, 1, 2. That's what I'm looking at. And then you could see this going to pretty high marks. Long term, there's a lot of gaps on the way down. I don't know if it deserves to be there. It's kind of fallen out of grace with a lot of people, target, but whatever. It is what it is. Yeah, you could see that longer term as a possibility if you were to able to get above here. Maybe it pushes up to like 119 area where this support is. And that could happen in October. There's an earnings right around this time. That's a maybe. But it would be like a back test on support. So I think that's a possibility. But for now, it's like we're looking at all this stuff and it's like really, 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 really small. But there's a huge amount of volume in it. And then this wave right here is my bigger concern because you see how it dropped through it? So it like came back and punctured it. And then once it jumped above, this is why I thought target looks super good right now. Because it jumped above and that first reaction back down actually held it. And then it makes this higher high. The second reaction down holds it. So both of them have come down and like retested that mark. And that's the big, again, the big wave cross here. So for now, not holding my breath, but for now, it looks pretty good. Like it looks like it's in a position it's ready to come back and do a major retest. There's certainly levels here like this. This is a rise that it kind of correlates to an SOS right here. So I'm not too worried about that. It would break above either way. So you don't have to have this on the chart, because if it comes up here and it breaks above it, good. And if it doesn't, well, not good, you know? Okay. There's also a, if you look at that auto reaction, it's the same thing right here. It's going up to like about 100 the way the angles are right now. So I don't find this to be a particularly difficult to read trade. I think it's pretty straightforward. Yeah, and then this guy, this marks off the, I'm just kind of raising that creek, showing how it's like turned up here. Each one of these levels would need to be met with buyers, but at some point it just gets to a place where you're like, it's basically just coming back up to retest 102 and then potentially 105. And I've got it kind of melting up. But part of the reason for that is also that locally, this is like, in my opinion, this is kind of like the melt up zone right here, right? And so long term, when you look at the way this has moved, there's these kind of huge middles on this widening, right? So this is a widening here, and then this is a bigger widening at the top, which obviously led to the downfall. But I think that you can look at this and consider, like, where does it kind of traverse the most? And if you go back and you look at this long term, it's kind of lowering the bar, but there's these big push-ups that happen off of like 101. And that's really where the SOS is. So these big push-ups, there's a lot of buy-in, is what I'm trying to say, off of 100. So if you look at that and then you look at where that SOS is at 100, it's like, all right. So that to me is like right at the bottom of a range. It could go south here and take a nosedive for a spring. Could end up being worse than a spring, I guess, if something doesn't go right. But if it lands here and it holds and then it makes that advancement, it's going to be pretty darn bullish. Like this should kind of shoot straight up. I really do think it will. It'll kind of melt up. This was a single 1 hour right here, period. So it's certainly a possibility. And I had done this earlier, but there's another one on the auto reaction right there. And you can see that one's a bit wider, and it does enforce the idea that this could take a longer time to get there. So I'm not trading anything on this past September 15th, like earlier than that. I'm not doing anything like this week or even next week. So there's a possibility that it goes fast, but there's also a possibility, you know, things churn sideways here. So I would not hold my breath. That's why I traded out of it this morning. Went up like 30%. Bought back in right here. But even with that buy-in, it could end up being not the best. You know, if this does come down and ends up kind of failing, it's not going to be a great buy-in, is it? So I'd be much happier if it just goes ahead and does a spring, to be honest. Gets it done with before next week. I think this would be pretty obnoxious, but I could see why it might do something like that. And then, you know, I don't know. It is what it is. It's a messy chart the way I've got it, but there's reasons for that. The only thing that I'm like not sure about, so I would do the same thing here, is what I'm trying to say. Like I would do the same thing if it popped to like 99. I'd probably sell it and then re-enter when it kind of breaks out. I don't think I would just like hold it if it went here. Just level to level. And I've been making good money doing that, just trading it up, getting out, re-entering with a smaller position if I'm not sure. Letting it do its thing. Pretty easy to trade that. So yeah, Tesla, it jumped. made a higher high, so that's big. So you see how it came back up after this drop? There's a decent amount of volume on that. It's not huge. This is kind of low volume still, so it's questionable. I'm a little bit concerned that it has some kind of like a head fake motion and comes back, because it did do that yesterday once. I don't think it was the same time. It was like early in the day. Yeah, it was like a couple hours earlier in the day. So that's a possibility that it fakes out. But it did make a higher high, so that's good. The fact that it came over the top, as long as it doesn't sell back through this creek, I think it's fine. If it sells back through here and comes back through 350, it's almost guaranteed it's going to come down lower. Like, I couldn't even make a stronger case for it. I think it would be almost painfully obvious it's probably going to come back below. If this were to drop here, it would drop pretty far, at least to there. Yeah. And I don't know what to make of that. It's sort of a full retrace to 348.47 if it did that, so that's pretty low. I'd probably buy it and buy that dip. I still think this has some really serious bullish potential up to like 370 and at least 360. And at least today, coming back up to test the top. So right now, it kind of just looks like it hit a wave bottom. So we'll have to wait and see. There's another little creek here. It looks like the parallel, doesn't it? 11.6, 14. I wonder. Yeah, so there's a low that was hit there. And I actually drew a marker off of it that starts that trend up. And then there's actually, it looks like it's doing like a flag. So that's 15 degrees. It's probably pretty similar. I don't worry too much about them being perfect at this level. The difference is fairly negligible anyways. 12.21. Yeah, either of these is fine. They both kind of work. But basically that's a parallel. Right there. So if this were to drop down low, yeah, maybe there's another reason for that. Let's take a look. EUDA and NNVA. Yeah, we should check those out. So this would be like a 1, 2, and then possibly a 3. Well, there you have it. There's a 618 that is right at 350 or 349. So it's probably what was in view back here when it came down. I didn't even do it. I didn't feel like the need to do it. So if it were to drop below it again, it could be like a double bottom situation where it's pretty darn close or just slightly below here. And there's also a chance that it's going all the way back to this top, which is at 347, which is really low. And that'd be Thursday. I don't think it would get there today. So there's a few different spots if Tesla comes back. So this is like a wave that goes across. You can do like a 50-50. I would take that angle into consideration. I didn't do that. I just kind of doodled it. But I'd take that angle into consideration. That's super steep. It's probably this one. I mean, if you guys want to know what I've been doing, this is what I've been doing. It's not very exciting. Well, I don't stream it. And I get it, you know, and it's not for everybody. Maybe. That's pretty high. But it probably would be coming back to this. I think there's a weird gap right off the, there's no real gap there. There is a weird little spot right here. It's possible. Well, we'll see. I wouldn't want to go too crazy on this. I think that mark, that red mark right there is probably the one. Yep, this is why I didn't stream it, because it's kind of boring. And honestly, I just sit around and kind of mumble to myself and think about entries and exits. How is that different than what you normally do, Booksy? It's different because I'm not talking to anybody, and because I'm really focusing on like trades. I'm not focusing as much on just the chart for the chart's sake, or big picture charting analysis kind of stuff, which is great when you want a macro move like AMC and GME. Not great when you're just looking at micro moves. It's not very exciting. Yeah, it's kind of failing to advance right here off of this previous bottom, which is around 351.47. So this was the lows that were hit. So just looking at a wave is helpful, but it's not enough. You kind of also have to look at like, well, the supports that were built and where it's rejecting. So if this were to break down now, then the expectation would be probably comes across here and then hooks. Like that's the normal expectation, because you'd have a break of this uptrend, or this ice level, if you will, and then so on and so forth. We'll see what happens. If it did advance, it need to find support kind of early and then cross up. But the thing about it is, even if it did do that and it advances, it's not likely going to give you a breakout moment unless it comes above this area right here at 352. So it gives me a sense of like, that's a resistance. It's also the creek. It gives me a sense of like understanding that I'm not likely going to get out with a lot of profit if I try to take a swing. I would have taken a swing here if this backs up and held. You could swing up. But that's about as far as I would want to take it, because there's no guarantee it's going to go over that top. Even if it did, you wouldn't necessarily know, so till it got there. And there might be something else to it, but I'm looking at the 6 minute, and this isn't looking too different from yesterday. Yesterday it really chopped a long time, you know, and when it finally broke out, it was a nice moment. But again, it's easy to see how this could be mistaken for a breakout and actually be like this early move right here. This is something similar happened where it built out and it tried to advance. It's 124. There's the internet blip. There it is, folks. It's the same time every day, man. I'm telling you. It's crazy. So this would be like a fake out where it looks like it's going to go and then it drops back through. And that really was violent yesterday. It went all the way back down almost immediately. So if you thought that was reasonable, I'll still check your stuff out, Oliver. I'm just looking at this. You might even say this goes down to here and then kind of comes above. This is really the buy zone then, if that's the case. If it finds support again above 349. And then it should be heading up. Again, not to say it's going to definitely repeat, but it is very similar. Then it would be heading back up towards this level that it dropped from right here by like end of day. It really did a number on it yesterday, didn't it? That's crazy. It went so far. This all happened earlier in the day, though. See, this is like, it got like 2 hours left here. $1,400. Yeah, to 1,600. Yeah, I don't know. It's a little bit late, so hard to say. I don't want to get too much more detailed about that, but I would suggest that it's better to take a wait and see approach on this one for now. This would be like a Thursday move, which is kind of odd. Unless, is there supposed to be like news tomorrow? That'd be really weird. So what this looks like is kind of an early wedge break, retrace. If, on the other hand, this were bullish, yeah, I think I'm right. It should just hold here and head up over the top. It should just go. Shouldn't drop back below that floor again. I'm skeptical of it. Be more like that. And then it does like a 50-50 over the top. This goes pretty far. All right, we'll take a look at these other ones. So it's like 360. Yeah, no, it's a bit of a mess. I wonder what Apple's doing. I haven't looked at that in a minute. Apple looking great. That looks great. That's what I want to see. I'm still a little bit cautious because I think there's always a chance. You know, you don't really know until it goes, but there's always a chance this could still back up, especially here to like this level at 228. That was the level that I wanted to see the buy-in. I had a marker placed 228 to 238, which is like a high probability zone. Because if it breaks back above here and holds that support, it should push up on this angle with that wave at least back to the top. But then it's probably going to extend beyond to 238 because that's where the parallel is. So it's like a really easy to use trade. This has still got a lot of room to move, but I'm not so sure about avoiding 228 again. I think it could come back one more time. It wouldn't kill it, especially since it's making a, I don't know. You can make a case for it. There's a lot of volume on this. There's like 2 candles on it on 228. So I guess you can make a case that it's fine. It doesn't need to come back. Target making a little bit of a move here. It's trying to move over the top. Again, we'll see. I don't think it's like out of the question that it goes, but I'd need to see it make a certain push right here. Like that's the big one. This is kind of redundant at this point. EXE, perfect. Came right back down. That's another one I want to trade again. GS, trying to go. I don't know, man. Maybe it'll just go. UNH had a nasty drop, but it was kind of expected. I think if it jumps the creek, it's probably going to push all the way to the top. So if you're looking for a trade here that you want to just kind of swing, this is a pretty easy one. There's no guarantees, right? If I was able to tell you in the past to buy a retracement, I would have said get a 618 marked off, buy the dip, and trade it up to 618, and it did that. now there's a kind of a question of like, who knows? Do we need to trade liquidity down low? If so, we're going to come back down again. But I would suggest that if it can get above this marker, there's a decent chance. This is old news. This was meant to be like this move, by the way. But I actually had it over here. I just left it on the chart. I had it a little longer. It looks pretty darn close. I think UNH could end up back up before it goes down again. It could end up way up here, like near like 340 to 370 potentially, because it's taken a long time to get there. That's fine. But this is ultimately where I think it's going to go, is like back up to the top of this channel and maybe even breach it a little bit. So I'm really actually looking at this like, I think by next week it could be up at like 360, to be honest. But in order for you to kind of confirm that, it would have to have like a jump here with a higher low. So it'd be a good place to trade. I put an alert on the chart at 308. I think that I'm done talking about AMC for today, so I'm not going to be able to answer that question, but there's other supports. I mean, there's like 265, there's 246. I could tell you that. Those two are really good. 256 too as well. All those are possible places you might see some resistance or support come in. So yeah, I would want to see it kind of breach this level and then find support here. And if it did that with a tight stop, I think you could have a trade in play. And then you'd want to watch it jump over this, so on and so forth. The only reason I'd be cautious about this is because it made the lower low where it did. I think I'm a little bit concerned. Like the flag can always just kind of go, but I'm also concerned about this double dip, because if it goes down like that, sometimes that indicates that there's a desire to come down again. And that's why I'm like always kind of weary. Not sure. The strength test is fine if it breaks out and just keeps going. It's kind of confirming itself if it does that. But if not, then you kind of have to just take it with a grain of salt, that this could be like an M cross up. So you'd have to be careful. This is kind of a both. It's not either or. You'd want to see it come above and not do something like this. So if it loses like a trend support, I think you're in a position where you could see a pretty gnarly spill back down again. And it's not that complex. It's just a wave. You can look at the distance between them and just kind of estimate where that might appear. You can see right there, that's like a cross right there, bottom top cross. So you might be in a situation, there we go. So look at the cross, where by September 3rd, it's kind of slow moving. September 3rd, if it's not advanced, I think you'd be in a blech situation. So this is the chart I was going to use. It's probably not going to do anything till close to September 8th through the 16th. The dates that we had in mind were August 25th through September 11th. I've said it a lot, but I've repeated that that's a window because I didn't know where to expect. Like, I didn't know if it was the bottom or the top of that initial move. And that initial move, again, is like going into that range is like August 25th through September 11th. We have now GME earnings on the 8th. So that's very likely around the time. And I just did GME, and it's got a decent chance that it could be in a breakout by the 3rd, which is next week. I would not expect it to be gone by earnings, but I would expect it to potentially be at $30 by the rate cut day. And that's best case scenario, but we don't really know what's going to happen to the downside. And I think AMC is the same way. This could definitely see it drop. AMC could definitely see it drop. AMC is more likely going to get to like 226 or something if it drops hard. I think that's where it's going to try to go. I don't see why not. It's just right there for the taking. But could it have a drop that just barely goes below 272? Yeah. Could it have a drop that barely goes below 246? Yeah. Those are both potential places where you have phase B bottoms. So this is like higher up right here. This is like another one right here. All right. NNVC, nanoviricides. All right, so first things first, you just want to check, is the trend intact? I don't see any puncture of the trend, so that's good. I don't see any weakness there, so that's good. There's no puncture of this trend as of now. That doesn't mean it couldn't do it, because this could end up being like a midway point for a drop, and you got to be careful of that. So let me keep that on the chart right now, because who knows? I'm not saying it will happen, but that'd be an SOW. Oftentimes, if that happens, you'll still get a reaction up. Like this will still come back up again, and it'll do some kind of a creek jump, because they're just testing strength, right? And they found that they can push through that, like if they don't hold it up. So oftentimes you'll still get like a reaction back to the upside here, and then it'll go up into a distribution. So if you did something like that, that's what you would watch for. Yeah. And then where are those levels at? There's a long-term level of support here. That's probably the 155. And then I would look at this as a inversion and say, is that like a retracement? And it is. That's a 155. So that's a 50% retracement. It didn't quite get to it here, which is kind of interesting. And I don't think it has to do this in order to get to it, because you could just walk right back up. That's certainly a possibility that this stays a little stronger and then goes up again. But I would suggest that 50% retracement is probably a decent trade. And that's about the only trade I would make from here. I'm not looking for like a squeeze play. The thing is kind of like bottling up into a corner, and it does look like this goes way back. This is like a really important level. So, So my concern, I'll just tell you right off the bat, my concern is that if that's what's in lieu here, and this is the trend, if this is an SOW, then the purpose of that is really straightforward, because it would be like, we need to get down. We've been in this elevated move. This would basically just be distribution, which is high volume, high volatility tops above the top of the marker, which it does look like. If that's the case, then you would basically be just doing this just so you could sell back down and come back low again. And then you can see like the build out here long term would present a huge problem. I mean, yeah, you've got some levels, like this is a rough area of support. This is a rough area of support right here. You've got some supports, but they're pretty darn low, and there's nothing below you in the creek. This creek has no back test at all. So the first move here is going to be pretty darn ugly if it happens. So you'd be looking back at this in retrospect saying, well, that could end up being like a 50-50 move down. And this is like the middle of the S-curve, right? And so, yeah, maybe it comes back up, hits 155, but it's already made that SOW. It hasn't happened yet. But that's where you get into some really big trouble, I think, because you really looking at this big picture, you're like, oh yeah, well now it makes sense because it looks like, a massive like S curve. Yeah, it does. And every time they make a bottom, I'm always thinking about this in the back of my head. So if I see them making like a support, I'm looking backwards saying, is it higher than the previous support or is it still maintaining a downtrend? Right now, this is a lower high than the previous one, and the support is lower. So like both the push here and the support are lower. So it's still in a downtrend. It hasn't left it. Which you can be like, well, yeah, duh. But I mean that like the price action is still in a trend. So it had this nice reaction, yeah, but it's still having trouble. It hasn't really started turning yet. This would push it back above your moving average. So if that happened, again, it could be a pretty bullish swing for a moment. I would just be cautious about this, and then maybe a 618 retrace, which probably is this guy right there, is possible. That's it though. I don't know. I don't know if I would trade beyond that. If it doesn't come down again, I'd be kind of weirded out because this to me has a gap. It's below that other floor. It's like all kinds of signs here. See how it like dropped below there? So this is where it took off and it came all the way back and dropped below these supports. So I would be like pretty confused if it didn't do this. It just went straight up. I'd be like, oh well, I don't know what to make of that. To me, that makes sense, and that would be a weakness. So anyways, so short term, it's probably a pretty decent trade if you wanted to try to make it. If it does either the break and hold here, you might get a good 10% out of it. If it goes down, it's even better. I think you might get a bigger move. You'll likely get 12% out of it pretty quick. Why am I not looking at a bigger version of the chart yet? Couldn't it be a bigger thing? Well, I think I kind of did though, and it doesn't, to me, like 4 hour looking back over the course of like a year is plenty of time. I mean, yeah, like I could keep going forever and ever, but if you're just looking at this, it's like that's a widening. It hasn't broken out. So in order for this to really convince me that it's going to go anywhere, I would need to see it break above like $1.70, and that's far away. And right now I don't see it happening for a couple of reasons, and I'm also looking at this and like, yeah, this was like a break here and it looks like a distribution now. They've took it back below here. See how it like hooked beneath it? So like that just doesn't seem right. So I had to be pretty bearish on this. I think you could get a short-term swing out of it. It's a very volatile stock. There's probably a lot of opportunities to swing, but I don't think it's bullish. To me, it doesn't look bullish. And anytime I see something that looks like the middle of the cat ears and it dipped below, I'm always like, That's always a big caution flag in my brain. This could be going to like 0. Yeah, like really far down. I get why someone might look at this and think it's going to pop really fast. It's had these kind of massive swings, but again, I don't really see why you would trade it unless it comes back over 180s. Then I think it's possible that it's in like a swing mode, your bigger, maybe devil horn ears kind of thing. Like a big, huge swing here. Neither here nor there though, right? It's not happened, so. This is one that probably has a lot to do with news. So, if you follow the news on it, you might find that there's reason. If it has a big pre-market move, for example, if it's on your watch list and you see it's up 10% pre-market, 20% pre-market. Check the volume, see if there was news. Because it might be that this just needs a news bump, and then it's a really great trade. If it gets the news bump, it might just go, right? It just sends it. And it's waiting for those moments, so that's where I'd leave that one. Yeah, this is an example of like one that I would have traded off the bottom here because it got really oversold, and then you could just trade like a retracement. As it stands, like take a look at where it started, where it ended. That's roughly, and I would even go down to here because this is like all kind of extension. It's like fluff, right? You can see like it really started picking up when that RSI came underneath and it dropped. And then that's a more accurate picture of like a 50-50. So, I mean, they're both there. I mean, you could sort of argue both of them could be used. I guess I don't want to make it sound like it's one or the other, but anyways, so this will give us some levels to look at. 50% is the easiest retracement level in the world. 618, I'll do the fib thing, but I would just look at it and say, yeah, I mean, is that the floor? Yes. Did it already check the floor? Arguably, yes. I mean, it's up there. It already came back and hit it. So what's left? All right, well, if this hook has already happened, then now we're waiting to see if it's going to have a range build out. So it probably means that it has a hook. I would usually assume that that means that there's a possibility that it's going to chop before a drop or before anything else. And then I would look at RSI. I'm not going to count stuff, but I also look for that 1, 2, 3, 4. I think it's right there. 1, 2, 3, and then 4, and then the drop. Weirdly, if I look at the RSI, if I look at this, it really looks like it's here. But when I look at the RSI, it's like kind of off to the side. That might be a better way to look at that because I think that's a better creek. Either case, they both kind of work because this actually goes right to the end. I don't know if you can see that very well. But this goes right to the end there and it has like an upthrust. My guess is that's the final upthrust over that creek. It should have been. Yeah, like right there. So it like pumped back up over the top. The last two highs. So that is a pretty good place to place the creek. And then you can see like the rejection here when it really took down. And then once you place it like right there, the rest of these kind of like, oh, these are just extensions. So this is an extension. So now I've got like a framework. And this is a 4-hour. I'm going to guess this is going to look kind of choppy. Yeah. Let's go to 30-minute because 1 hour doesn't look too hot. Same deal. I don't know what this is. Volume's all kind of whack. I really, not a great chart. This is a possible level. I'm looking at 15-minute. This looks like a possible short-term level. I'm wondering if we're seeing like a really flattened middle. And that doesn't mean it couldn't go down again. But if this is like an auto reaction of sorts, you know, there's a lot of things that could happen now. You go up to the top, come back down, and then do it again. You could have a build out here that's higher up, so on and so forth. This is really hard to see. So I'm going to switch it to line, which I don't usually do. And I'm going to kind of look for my normal markers. So this would have been the hook value right here. So that's done. But that parallel typically runs through the rest of the formation, and it usually does. So when you see that little hook on the beginning, when it's coming in and trying to stop the advancement, that oftentimes ends up producing an angle that's fairly commonplace then throughout the rest. So we're sort of building ourselves a I want to say bulls are always building a way out, but that is a good way to look at it. It's like they're trying, it's like, what if this were to reverse? What would we want to do, right? So this does look like it came over the top. I'd have to double check on that. It looks like it made a higher high. So it's possible this has a bottoming at play. So it did react pretty high. Even though this is like a hook kind of value, it did come over the top. It's a maybe. It's a maybe. It hasn't made a higher low just yet. We don't know. Probably going to ask the question, do we think it comes back up again? So this is that working out here. So right now it's sitting on a 786 retracement, kind of eking across the 786. This is all fibs. So anywhere from here to like 221, if it found support and jumped a creek, it could be very good. So if it's already got support and it's doing it again, I'm just kind of nervous because of how weird and flat it is. This could have a quick drop, which is why I'm not sure. There's just no way to know. I mean, look at where the RSI is. It's sitting underneath the moving average. It's just really odd. My guess is if it popped up again, you might have some resistance here at 241. And then you really just want to see if it's going to go down lower. I think that's what they're trying to do right now. It's like sell, 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 sell. It's just dangerous. It's a dangerous trade. So we could do something like this. Yeah, let's see if there's another one. That's this guy right here. So yeah, maybe if it came above and it made a higher high, we should just start with the simple stuff. So if it makes a higher high than like 230 and then finds support, I think it's in good shape. It's a weird little tiny version of this thing. Then you're going to see if it makes a higher high than this guy at like 250. If it can't even make a higher high there, it's probably going to go down lower. The typical sign of a cat ear isn't always like that the middle here is lower, although that does signal it sometimes if the middle drops and comes up. It's really more about that the second push, because if the second push is really weak, it usually means that it's not going to go. So like that would be like this. And then you're probably just going to drop to like lower lows, right? That's typically what happens. So it's like you really got to be careful on this particular wave that it goes up higher. So even if you got this nice little bounce here, 227, once it hits like 230s, then you got to be careful. Now, once that happens, you know, it's the same deal. It's like kind of the same exact thing. If this came back above and held support and jumped the next creek, so on and so forth, it's probably even going to be like parallel or something, the way this is building out. So you can choose how you want to trade. You can just trade it based on parallel structure, like one to the next. Breaks here, goes to this one. Done. Breaks here, goes to the next one. Done. It might be a wise way to trade it so that you don't get like in a bad spot. And there's not really any way to know what's going to happen here, unfortunately. Anyways, so that's like retracement that way, and then you can look at bearish retracement from bottom to top here. So if it doesn't have a new low, and this is the low that sticks, this should give you an idea, and it doesn't really line up with anything, which is kind of why I'm wondering if maybe it's not quite done yet. This one lines up a lot better, in my opinion. This low here, this kind of coming down again, that lines up pretty well. But then again, I'm not using like wicks, so candle wicks. I'm using like lines, so who knows? It could be a little off. So it's a 786 retracement. If that has a move back up, that's 50% even, or 618. Those are good possible places of recovery. I don't leave the fibs on all the time. Sometimes I do. If my chart's cluttered and I can't read it, I'll turn it off. So that's just a top, and then these are the two fibs. Those are possible levels that it could go back to on just a rebound here. So like this kind of gives me a framework for possibility where I've got this, these are my waves like breaking down. And then I've got potentials for, well, it could go to there, or it could kind of meander, and there's not really any one size fits all. It could be either one. I don't think this one looks like, doesn't make a lot of sense to me, but if there was like a second buy-in, sure. So those are good trades potentially, but we're not even close to that point yet. We would want to see this first. This is kind of the first step. The second step, 238, and then each of these levels. But yeah, you could see something like that. You could see a 618. And then that gives us an opportunity to like go sideways and like build out like a bigger setup for later. You'd have like potential for retracements and stuff. So the last thing I would do is look at wave movement. And I would just suggest that this is not perfect, but I would just look at where does it start and then where does it seem to have crossed over. This is the way I've been doing it lately. Where does it seem to have crossed over? It could go farther, so you just keep in mind this could be widening, but for now that's pretty decent. So there's a good chance that this would be like a peak right here and then a valley here if it did go up again. So we've got some pretty solid guesses here. More like that, right? So it's not bad. And I'm pretty sure if it did this jump, this would probably still come back down to like here. So that also makes sense because it's really close to triangulating on the bottom again. Where that 854 is right there. So if they don't have ammunition, what they may do is take it up first. And again, it doesn't have to be that high. It doesn't have to be 273. The 0.5 right here also makes sense because of this ledge. So there's just a lot of reasons to like always look to the left and just see what the heck is over there. That doesn't even really make a lot of sense to me. This could make a lot more sense, I guess, is what I'm trying to say. That we get like this kind of a push up that maybe it goes pretty far, but it sort of stops at 264. So I don't think the trade is, I think at best this trade doesn't really go anywhere. It kind of just meanders. Or excuse me, at worst, this trade doesn't go anywhere. It just kind of meanders down and settles in and then makes a decision later. I think at best, if it breaks out here, you're looking at a 17% run to maybe 266. But it has to make two really clear motions because it's definitely hit a bottom here. So it's going to have to face the 238. There's no question about it. Like it's got to make that recovery right here. Otherwise, this ain't happening. So, if you were really patient, you'd probably wait until a higher high here and then the 238 to see that it has support. That's not as big of a move, but it's a better move. This seems pretty likely to me that you could get a nice big pop here. That's still 12% or something. So yeah, I'm not going to look at this like any bigger right now because it already made that top. So like it's certainly a possibility that this wave goes really high and does like a phase B top or something and hits $3. But like it already had the reaction that it needed to have. And I'm not really sure you could count on much more since it already created like a drop here. So yeah, this is just one of those things where I personally wouldn't trade it up again because it already broke down. I don't see this as like a spring. This looks like a up thrust and then a distributive action here. It would change, you know, if you're like, hey, change my mind about this. It's not that hard to change my mind about it, but it would be necessary for this to come above. I mean, it's quite a lot. It had to come above $3. I guess that is a lot. But it'd have to jump this creek right here. Like that would change everything about the setup. I'd be like, yep, okay. If it jumped up to like 4 and then came back and held 3, you could be in a really, really positive setup because then you're basically back in the range. This is a strength test, so on and so forth. That passed essentially on the bull side. We're kind of doing like a combination of these two, aren't we? Well, the big picture here was whether or not this drops or not, and it's taken like all day, so I don't know. I guess we're not going to find out. We may have to wait till tomorrow or after hours. I'm not a big fan of that. I think this looks like this already looks like it's dropped beneath here, so I think it's probably going to try to come down, but that's my 2 cents on it for now. It's kind of a bummer. PTIX to 620. Went delisted and went to 9 cents. Oh, wow. Well, I mean, that's life. If you trade like penny stocks, sometimes you're going to get burned, you know? So, it happens. Well, what do you want, IVF or silo? Hmm. This might be like a slow death. I don't know. Part of me sees some potential here because this is like a rising M, and I feel like that's sometimes very positive because if it can manage to make a dip. But usually if it does that, it's back to this middle level. Like that's the strength test area. And you can see how it like avoided it. So to me, I think what's probably happening right now is that this is just kind of buying back up towards like a 50% mark, and it's going to drop again. Seems likely. So there might be like an upthrust here to like 68. I don't think this is likely bullish, mainly because I think of this as like a, I mean, I guess it could be. It's just really ugly if it is. This would be like an SOS with a backup, but it's hard to tell. It's always these little cat ear parts. It looks more like a UT to me. I can't really tell with the volume. Volume's pretty high here, though. I'm a little worried that this might be like a fake out as well. There's a lot going on here with these waves because there's a lot of different ones. It's all about order of operations. If I can't quite determine what the order of operations is, or if it's like at a particular level where I'm like, I'm not really sure, I don't like trading it. I'm just like gonna not trade it. It's that simple, you know? So if I look at something and I'm like, yeah, I don't really know, this seems kind of off to me, or like I'm just not really sure, I'm probably not gonna trade it, you know? I could see why this looks bullish to on a glance, but like it's got a lot to get over here. There's got to be a break here, 65, another break at 68, and then maybe it goes up, but then you're still gonna have to deal with like the top, and there's just no telling. If he starts distributing right away at 75 cents, it's just a bearish double top, and then you're just gonna end up with a drop. I can't tell you, like I don't know. The RSI makes it look like I'm on the 15 minute. It definitely makes it look like it's possible. It's got this double bottom. It looks like it's possible it's going to push. So it makes me think it's probably going to do something like this. But a lot of times what you see with these tops is that this second top right here, it will go up just above the previous, even if it's bearish. It'll go up above the previous. And that previous top is like the top of the range. So it puts it in the same category as like a UTAD, upthrust after distribution. Like it sold off, pushes up again. If it sells off again, it's done. Like I don't think it would ever need to come back through this. So what you could do is try to trade with a stop loss in place. Maybe that goes below like 61. So you could do like a stop here. So yeah, if it just dumps, I'm just not going to trade it. For now, I'm going to re-enter. If it goes up, I'll trade it up to like 72 and then wait and see. And if it comes back below, it has to be like a perfect, I mean, it's got to be like perfect. Got to like catch it and then go again and like go again. I mean, that's how it has to look if it's bullish. And ideally, it wouldn't even come back through there again. You're really resetting your trade if it comes back. It's probably going to hit the 66 cents anyways. So it's not really make a lot of sense to me to trade it past 72. This doesn't. Or like maybe 73, something like that. I would be more inclined to trade it if it were above here and it was clearly showing signs of strength. No, I don't think so. Like, I don't see Silo as going up to $1, definitely. This is the situation where that happens, and I could see it, yeah, there as like a walkout, like that goes back up to here. Um, I don't think that that's completely unreasonable. That's what you're seeing either. I get that, but like the way that this is set up, you have to understand that if we're wrong and this is not like a sign of strength with a backup, there's only one other thing it can be, and that's bad. Like that'd be bearish. So if it goes up and it drops through again, you're gonna see like a really nasty like spill down, and then it's gonna just start like a walk through the park to the bottom. And I was saying like long term, this would be potentially really bad. Kind of has some AMC vibes, doesn't it? So I'm just not sure, man. I think it's a bit of a mixed bag here. The thing is like long term, oddly enough, even though this might look really bad as well, it's like that could end up playing somehow into its favor with a sort of like double bottom, you know. I don't know. I could see this as a flag. That's all I'm trying to say, like a bear flag. I could see it as, and I don't think it necessarily goes down to here, but I could. It's not. It's not like it's completely gone. Right now, if this breaks above, I think you could trade it and just ride it up. But I don't know if I would trade it much past the top. That's just me. There's a bit too high of a chance that this goes through and does something kind of gross. And I can't do the other one. So IVF. I'll have to do it later. But I got to get going. I had some other stuff I was going to do today. I'm not trading what I wanted to trade. This doesn't look hot. I was going to trade in and out of it, and I didn't do that. So every time I stream, I get a little too wound up in the stream, and then I end up not doing as well with my trading. And my trading has been going very well. But unfortunately, it only does well when I'm not streaming. So um, I got to kind of stick to my guns on that because I need to make money for really for my family, for myself, etc. Target, I came back up, so that's good. That might actually be winning right now. EXE, I'm probably going to look at getting back into soon. Although it's doing that cat ear thing, so it could still drop down to. I kind of want to see it go back to like 95.20. I think EXE is likely to go back up to 100 here, but it needs to make that back up. So Tesla's kind of my big pooper right now. Yeah, it's doing that thing again. This is what happened last time. It went up high and then it just dumped to a new low. And it did recover, but volume here is doing all kinds of weird stuff. This will be okay. This will be a really strong move if this cross up right here holds. If this is an M cross right here and this holds right in this area, I think Tesla's going to pump all the way to like 370. I know, it's crazy. But I'm serious. Unfortunately, it might be something that we don't get to see in regular trading hours, so. But these two, EXE and Target, they've been trading pretty steady as she goes. So those are good ones. Wolf taking its time, but I still think Wolf has a potential here to be really bullish up to about almost $2, but I would probably only trade it to 160. All right, I gotta go. Did a lot of AMC and GME in the middle of the stream today. Did some early analysis on some other stuff. I hope you guys have a great one. I will catch up with you when I can.